audio. Properties. Sorry, guys. Oh, whoa. Oh, okay. I don't know what I'm going to do with these recordings, to be honest. I just record them just in case I want to re-listen to myself. Okay, so we got 8 people online. People online, welcome. If you need anything, feel free to ping me or even just chat online. Anyways, let's see. Do I have everything? Okay, we're good to go. So yeah, this is what I was talking about last week, guys. So do you guys know who? First of all, do you guys know who Mary Meeker is? Maybe like a little quick introduction. So since 1995, she's been doing like the famous internet report, the internet trends, 1995, 96, and you can actually look at it if you go to her website right here. Let me see. Capital. Hey, welcome. Feel free to sit anywhere you like. So this is her website right here. She used to work at Kleiner Perkins, and I think she was a Morgan Stanley analyst. But you could actually go in here and download now her 1995 Internet Trends Report. And so I read this every year. This is just my, something I have to read every year just to kind of get a feel and align myself to like where things are going. But yeah, if you guys want to look into it, it's right there. So she's just a famous analyst that worked at many credible institutions, and her work is just really like top of the line. But anyways, data volume plus utilization. Technology change is greater than human adaptability. So this was the slide I was trying to look for last week, but I couldn't find it. We're not starting yet. I'm just showing you guys this chart or this slide. Humans' ability to adapt to technological change is increasing, but it is not keeping pace with the speed of scientific and technological innovation. We are right here, and then this is human adaptability, and then this is technology, right? And then this red line right here is the potential human adaptability acceleration owing to faster learning and smarter regulation. What do you guys think?
It's crazy actually. There was this conference of machine learning.
Yeah.
And about 1,800 papers were published. And they said
1,800 people what?
1,800 papers
were
published.
Right.
They said if you really wanted to do justice to read it and do it properly, it would take you like 5 years to fully understand, digest what these 1,800 papers were really saying today.
Mm-hmm.
So I mean, there's no way you're going to catch up.
Yeah.
With where we are at.
Yeah. No, I agree. This is interesting, huh? I saw this and I always draw it in terms of like, oh, you brought donuts for everyone?
Donuts here?
Well, now you're competing with Bernard.
No. They're not a competition. It's all good.
Hey, thank you. I'm gonna give it maybe 5 minutes before we get started. All right, guys. If you guys have any questions, like feel free to ask. Like just chill out, hang out. If you want some water, there's, if you need to use the bathroom out to the right, you guys know. Any questions about this week? For the most part, it was a pretty light week with July 4th and the markets. Say again? It was a bullish week. Yeah. So last week we were basically saying that as much as I hate it, the markets are going to go higher based off the technicals. Yeah. But we know that the underlying economics don't look too good, but that's okay.
But I think it is good this week. Jobs are really.
Yeah. So the jobs part. I was going to talk about that too. So the jobs report came out. That looked good. That cost a. So if that looked good, that made the economy look good. If the economy looks good, then most likely interest rates will rise. And if interest rates will rise, then the dollar will most likely go up. So it actually went up. So if a higher interest rate is more attractive.
Well, those were the markets that were sold off initially on Friday.
Yeah. But for the most part, if you analyze the global macro, dollar went up, right, and gold went down. So gold got pummeled, right, which is to me like an opportunity to maybe consider getting back in or sizing in a little bit more because it's still in an uptrend. It's still holding the 20-day moving average. That's what I'm looking at.
Well, the politics of Asia with the trade war and then North Korea, I feel like set it up. They're kind of expecting a little bit of relief in the stock market, things to go up, but then maybe gold would go down a little bit.
Well, I wasn't going to go too deep into stocks today, but let's look at the quick global macro picture. So this is how I flip around and just kind of see what's going on in the world, right? So let's say indices right here, and if I go to weekly, I could just draw one. Well, okay, I have it right here. So you just draw one line like that, and I see that most indices are kind of going up on the USA, You look over in Asia, this is Nikkei right here. It gapped up right here, pushing up higher. European markets, Euro Stocks 50 and DAX are both pushing higher. So it doesn't look like too much fear in the markets. I think markets will continue to just march its way higher.
At the same time, though, the
Can't complain.
dollar is going to be devaluated, right?
Speaking of the dollar, so the dollar actually spiked pretty hard, and you could observe this spike right here the past few days. So again, we have a good economic report that came out, pushing or suggesting we're going to push. If the economy looks good, then suggests higher rates, which suggests higher dollar, and higher dollar puts pressure around the world. So stocks didn't go down, right? That's the typical mechanics, but that's what it looks like. So if the dollar went up, then everything else should be pointing down. So this is the euro, Japanese currency, British pound pointing down. See, everything else should be pointing down. Well, this one's pointing up, so this one's showing strength. This one should be pointing down. Australian dollar sort of pointing down. New Zealand dollar pointing down. So that's the mechanics. And then gold, obviously, if the dollar went up, then gold gets hit. So this is the gold performance that one day, right? But if you apply your technicals on gold and take a look at it, let's see, let's do /GC. Gold futures, use the COMEX current front month. Do I already have it on? Oh, I didn't press enter. Okay, my bad. Or not. /GC. This is my quick technical analysis on gold. If it would work. Okay, never mind. I have the chart down here. So this is gold right here, holding the 20-day moving average. I don't know if you guys see that, but I'm still bullish on gold. Yeah.
So are you waiting for 20 MA to hit, or are you now going in?
Typically, I like to stay. So when it extends far away to 20 MA, like Bitcoin right now, I like to get out. Right. So like let's say the upper band right here. If it extends too far out, pierce through the top Bollinger, I like to get out. I like to take some gains and then get back in at like a retest. I think you can see this perfectly with Bitcoin, so I'll show you Bitcoin real
Yeah,
quick.
I think at
Bit-
9,900.
Yeah, Bitcoin looks really, okay, so this is it right here. So here's an example, and this is how I got out. Not really at the top, I got out at 12.9. But so my 20-day moving average, or also the Bollinger Band 20-day moving average, is the green line right here. And you
So
notice
what's
that
the setting for Bollinger Band?
daily. It's just
This was
standard.
Three
I'm using a standard.
K and D, which 3 and 5, and
For the Bollinger, it's 2 standard deviation, 20-day moving average, just the standard setup. I don't modify my own indicators or anything. Yeah. I mean, you can if you want, if you know how to back test and then kind of get the percentages, but to me, I'm very discretionary, so I just kind of use the standard. Because I kind of gauge like, okay, what's everyone else using? And I just go with that. So you look at the 20-day moving average, so this one gapped up high volume, went sideways, which is good. Tested the 20-day, tested the 20-day again. This one broke the 20-day, but still holding the 50-day, right? Which is okay. The 20-day is probably like the, hey, take some, but the 50-day is the main one I really look at in terms of like longer-term uptrend, right? And then now if you look at the most recent, it went all the way up to 1,400 and then back to the 20 MA right here. So I wanted to fill really at 95, 9,600. It did hit 9,600, but I was really eyeing 95. It didn't hit it, so I'm not back in yet. I'm just watching right now. But for now, the 20-day moving average is still sustaining. I'm looking at, it's kind of tightening. It's still an uptrend. I think it could go higher. It'd be nice if I could get a 50-day moving average entry, or like maybe back to 10K. But that looks like a slim chance right now. Right?
Is
But
it, do you think we could look at, was it last year that Bitcoin actually went up to 20,000?
yeah, we can look at it.
It'd be interesting to look at that compared to today to see if
The same dynamics apply?
Yeah.
Yeah. So, let me see. Let me switch over. Oh, whoa. So we're just hanging out, guys. Do we have new people in here? Sort of, kind of. Well, welcome. Nice to meet you. Okay. Let's see. So if you look at I guess you could kind of test it, but I won't go over it today because I have 40 pages to go through today. So we could probably look at this through the end. So let's kind of get started. It's already 10:20, if that's okay with you guys. So let's see. So today's session is probably going to go a little bit over 2 hours, just letting you guys know, but you guys are welcome to leave at the 12 mark. Just want to disclose that. Technical discussion number 123, Mary Meeker's legendary internet report. I always like to start off with a quote. When you feel like quitting, think about why you started. All right, you guys ever had that moment? There was a moment in here for me when I think it was like technical discussion number 75, and I was like, huh, why do I keep doing this? And then I remember why I started. And the reason why I started because I wanted to improve my own personal investment game. And then now it's just I don't get that feeling anymore. So now I actually look forward to every Sunday, just to kind of see you guys and chit chat stocks or whatever. So glad to be here. Going back to the slide right here, it's going to be 40 slides, so it's a report. Anyone could download it. It's at bondcap.com. But again, this is just an internet report.
Sorry, where is it?
Bondcap.com. So she used to work at Morgan Stanley to Kleiner Perkins as a venture capitalist, and she left, started her own fund recently, I think in the past year, which is called Bond Capital here in San Francisco. And so I continue to read her reports. So it's like an annual thing that I do. But again, we're going to read the report today just to kind of get ourselves aligned to the secular trends of what's going on in the world related to the digital economy, the internet economy, and so forth. But anyways, my favorite slide out of the 320 slides in there is this one, hands down. It's just showing that technology is evolving way too fast, and I don't think there are that many humans out there that are able to really adapt technology, right? That's why we were talking last week how I think we need to evolve our skill set in terms of looking at things and interpreting things by leveraging data science type of techniques, machine learning techniques. For example, the example I used was instead of reading every single Trump tweet, maybe we could collect that data and then just perform some algorithmic models and get an answer, right?
Summarize it for you.
Say again?
Make a cheat sheet like a book summary.
Yeah. I mean, so this report is so interesting that if you go down, it's 300 pages. I don't have 300 pages in here or slides, but it's saying that we're basically digesting data from a fire hose today. There's so much data.
I think Trump's tweets are simple. I think if they come if the market is open, it will go up. If they come after the market is closed, it will go down.
Okay. Well, yeah. So I'm going to read this out real quick. So to overcome the resulting friction, humans can adapt by developing skills that enable faster learning and quicker iteration and experimentation. Developing these skills is particularly important for policymakers and regulators who are looking to protect the public interest. They need to be ready to try new approaches, iterate, and change with the times so tech progress goes hand in hand with the public benefit. Interesting stuff, right? Anyways, that's a little teaser. I do want to do a quick market update. We kind of did it, so I'm going to do a quick S&P 500 marching higher. I see it going higher, nothing scary unless it breaks the 20-day moving average or the 290 mark. Looking across the USA, you guys just saw this, so most of the indices are pointing higher, so nothing much to comment. Looking over at the bond market.
What do you think about Russell?
Russell 2000, that one's a lagging one.
Yeah.
Yeah, so that one's important as well, but it's lagging right now. Do you want to see a more technical analysis on that one? So IWM. So this is what I'm seeing for the Russell. This one's been pretty noisy, up and down the 200-day moving average, which is my pink line. But now it's back up, but then it could be a false breakout or false move. Hey, man, you're really going out that beard. But yeah, nothing too much to comment. I know this one's sensitive to interest rates, so that's something to take note. But nothing much. Looking over at the bond market, so again, dollar rallied like crazy. So this is bond prices. So bond prices would go down, meaning interest rates are speculated to go up. So if you look, this is the price. If you look at the rates, this is the 10-year yield right here. So it went back above 2%. So at one point in the week, the last 2 weeks, everyone was talking about how it was below 2%. Like, whoa, bonds are going to the moon. Bonds are still an uptrend, right? So let's see how long this spike in yield lasts. But that's pretty much it. And then the dollar, we talked about it briefly. This is the action, right? So dollar went up, so gold gets pummeled. But Bitcoin didn't. Bitcoin didn't get pummeled. It should have. So that might be indication that Bitcoin is showing strength, right? Going over, so we have donuts over here for people who just came in. You guys are welcome to take some. I didn't bring it. It was Raj. It's Raj, right? Yeah, thank you for bringing him in. So looking at gold technicals once more, I'm simply just looking at the 20-day moving average, nothing much. I'm still managing my position in gold. There are some gold miners that I've identified. I don't know if you guys want to know more about gold miners, but I found some really tiny ones. All right, I spoke with a guy on LinkedIn, and this one is super speculative, but it might be an interesting opportunity if you want to take a look at it. So let me see. So this is up to you, okay? This is all for educational purposes only, but this one's an OTC, ONN.
Oh, so it's OTC only?
Yeah, this one's OTC only, so this one you might have to do a special order to get in. But I bought some because I spoke with a guy on LinkedIn. Let's see. I forgot his name, but his name is Jed. Osiko Mining. So this one's a speculative play on my end, all right? OBNNF. So this is the security right here. I'll show you the chart. Oh, not cheating. So this is a new watch for me. And then this week I also did research on uranium. Yeah, you heard me right, uranium. Yeah, it's weird, but I was doing research on silver, and then I came across this one, right, for gold. And when I was looking into silver, I was seeing like, okay, who's the biggest holder of my favorite silver company, which is ticker symbol PAAS. And then it happens to be this, was it Passport Capital in San Francisco? I forgot the name. Is it Passport? And so I checked their portfolio, and the biggest holding they have is this uranium company. And I'm like, what the heck? Like, why uranium? It makes sense though if like we have let's say a weaker dollar coming. If the global macro plays out, then commodity prices will go up. So this uranium company is actually trading at book value, and it's the #1 player in that space. I could show you that real quick, but this is OBNNF real quick. So this is a gold miner security that I'm looking to size in. This one's 600 million market cap. So you guys know me. I don't normally look at this size. I normally look at 2 billion up, but this one just looked too interesting to ignore. It has a world-class team. We won't look at it deeply today, but maybe another time. And then for the uranium company that I'm looking at is this one right here, CCJ. Do a little bit of stocks before we get into the internet report, and I'll show you guys this one as well. So Pan American Silver. So this is one that I'm bullish on right here for the silver play, right? Let's see, interactive. Trades. Well, you guys are kind of quiet today. No comments? Nothing? How was all tired out from July 4th? Or?
I'm just thinking about those donuts.
You're thinking about go ahead and grab them, man. Don't be shy. Okay. Well, you had a comment, Rob?
No, on the CCJ, probably I wanted to show 2011 prices as well.
You elaborate on it.
On the the prices on 2011, show them how the economy and the stock.
Oh yeah. You're talking about the investor relations report.
No, I think zoom it out so that we can.
Gotcha.
see 2008, 9, 10, 11.
Okay, so let me show them this real quick. So I was doing research on Pan American Silver Corporation. So this is my favorite silver play. I went down and I saw the same guy, Jim Simons, right? So this guy's like everywhere. Jim Simons. But then I went down and I believe I saw John Burbank from over at Passport Capital holding a significant position in this security, CCJ. And I looked at his portfolio and I was like, what is he holding in terms of like share and dollar value? And this is what I see. His biggest shares position is Pan American Silver Company, right? And then his biggest call position is CCJ. And I'm like, dude, for a guy who just has 13 companies in his portfolio, why is he so concentrated? You have to have high conviction. He's managing 250 million, right? And he's focusing on a lot of silver. So that kind of reinforced my bullish investment thesis on the silver play, the silver mining company. But now I'm also bullish on CCJ, which is uranium, because uranium prices are kind of depressed. Now, I know for the new people who just came in, you guys are like, what the heck? They're talking about gold mining, uranium, commodities mining company. We don't typically do this. It's just kind of the setup, the nature of the world, and kind of seeing how things are going. I'm getting a little fearful, and so I'm kind of protecting myself by finding these value stocks and depressed commodity securities. So the concept with the uranium company is the same thing as a gold mining security, right? So if the gold goes up, gold miners go up like crazy. So securities like AEM, NEM, GG, and all that. But if you look at uranium prices, this is what the prices look like. Let's see. Right, because this is heavily dependent on the price of uranium. Did you guys know there's actually no futures for uranium? It's all private deals. Can you imagine why? Yeah. So in my efforts to figure out, what is the pricing of uranium, there's actually specialist consulting firms or agencies out there that spend their time figuring out what the price is. Let me see if I can find overview. I'm looking for the prices. Why invest? Let's do this. How about this? Camco uranium price. Markets price sensitivity. So this is uranium price right here, and then we'll zoom out. Right? Check this out. So this is the price right here of uranium. Uranium spot, and then long-term uranium price.
Looks like gold.
It looks like gold.
High in the
Well, I mean,
during
yeah.
the recession.
Yeah, I mean, it's kind of decayed right here, right? So my thinking now, the gentleman John Burbank from Passport Capital, he's here in San Francisco, and they're a smart group. I listened to them talk. I think the chief investment officer, super intelligent dude. So I respect what they do, and I have to respect their position as well. This is their biggest position, managing 250 million. 250 million isn't big time hedge fund, but it's still pretty big. But biggest position in this, or uranium prices right here. So my logic is thinking, okay, well, if we do have a recession, then dollar will get devalued. If dollar gets devalued, then uranium prices will appreciate against the dollar. If that happens, then this uranium mining company trading at almost its book value would also appreciate. So this is the chart for CCJ, and this is the price to book of 1.13. So that looks attractive to me, and they're doing $1 billion in sales. This is a boring value play. Hey, welcome. We have a seat right here, right here. Feel free to have a seat anywhere. Any comments on this one, or random, right? Not the typical.
On the earlier chart, you were showing the difference between short term and long term prices was almost 25% delta.
Yeah, so that's the issue with a private market, let's say. So it's not like a futures exchange where there's volume. This one's like low volume, and I think it's mostly just sovereigns trading with each other, maybe. I don't quite understand the exact network of it, but markets are markets. Markets will always be the same. So spot is what they think is 24 currently, right? But the last transaction was probably 31, let's say, the last long-term transaction. I know the spread is pretty wide, right? That's why I'm looking at the CC&J, because it's trading at book value of close to 1. So what does that mean if it's trading at book value? If this goes down to like $10, right, minus 81 cents, then basically it's trading at what it's worth, right? Which is if you were to liquidate, it's worth about $4 billion, which is not bad. So this is one of those Warren Buffett. Well, I wouldn't say deep value play, but it's at value, right? And the thing that we're really banking on is the bet that uranium prices is going to appreciate. So this is why it's a great security. It's as low as it could go. Maybe it could go lower. If it goes lower, then it's below book value. But if uranium prices starts appreciating, this one's going to be the best in class to capture, right? Just like how Pan American Silver is the best in class to capture silver prices. Maybe the second best or first best. I forget. Hey man, yeah, you got the donuts, huh?
I know.
And then Agnico Eagle is my favorite. Hey, it's not me, it's Raj. So you gotta say thanks to Raj. So Agnico Eagle, I know the gold ones are kind of moving right now. So this is our gold play right here. This one looks good. This one looks really good. Yeah, I'm excited to see where it goes. But anyways, guys, let's jump to the report. I got a lot to go over today. Looking over at the silver chart, this is what silver looks like, holding the 200-day moving average. Silver took a hit again. That's expected since the dollar rallied so hard on Friday. Rallied because again the job report that came out. Job report suggests strong economy, suggests higher interest rates, suggests higher dollar. Higher dollar means gold gets pummeled. So same mechanics over and over.
Actually, I see silver compared to copper because I see them as industrial metals.
Oh, you have like a silver. Oh, you're looking at
Yeah.
use case metals, not so much precious metals.
Yeah, because I think copper actually determines what is happening to the economy actually, right? Because especially between China and US, and I see that it actually mostly trades with silver. Because silver is also industrial metal.
Yeah.
In my perspective, and it goes down. So that's why I think if you see the gold and silver ratio is the highest right now because silver is not able to pick up because of economy.
Yeah, yeah. So I think if gold plays out, so I'm treating this more from a precious metal perspective and also sovereign hedge.
Yeah.
right? I'm buying with the sovereign, while the sovereign devalues our income, which is what we talked about
But
last
silver
week.
could be very volatile.
It's what?
Could be very volatile.
Yeah, it could be very volatile, but these prices looks too attractive. So most of my silver positions are long dated calls, 2021, at the money, in the money calls.
So you do
ETFs, SLV. For the gold miners, PAAS, Pan American Silver, right? And so we looked at the hedge fund manager over here at Passport Capital, John Burbank. This is his portfolio, and his biggest position in terms of shares is this, right? In terms of value, his biggest value position, dollar-wise, is a call on MSCI Saudi Arabia, right? And then financials, he got puts on high-yield corporate bonds, and then so basically, damn, he has a big like call position on CCJ. This guy's extremely bullish on uranium.
So how do we know which striker or which?
We don't.
We don't.
Yeah, we just don't. This is like, you know, they deserve privacy too, man. I know you got a data background, but you gotta give them some privacy. But I mean, big money doesn't move fast, right? It's not like a day trade where you're like ticking in, ticking out. It's more just, you know, this is expressing high conviction.
So look at the bottom. United Health, he sold out completely. What's going on? Second last.
These two I don't know. I'm not tracking these.
No, he sold out.
Yeah.
He got out of it completely.
Yeah. So we could back test the chart and just see like what went wrong, right?
So
But for the most part, I could look at his portfolio and just understand what his investment thesis is, right? So it's saying I am bullish on Saudi Arabia as my biggest value position, right? I'm also bullish on financials, right? Because I think they're probably cheap, or maybe interest rates are going to go up, which is good for financials. He thinks interest rates will go up, right? Maybe because money is going to run to the U.S. dollar, interest rates causing interest rates to go up. That could be a scenario. He is super bullish on. I'm interpreting his portfolio. You guys don't know. He's super bullish on uranium. So bullish that he's purchasing derivatives to get exposure to uranium mining, which is already even more leverage.
So how do you know he's buying underlying versus derivatives, right? How do
He
you
has a call over here.
Oh, it says call.
Yeah. And then he has puts on the NASDAQ. So he's bearish, right? He's bearish on indices and IWM. And then he has calls on silver.
So this is updated as to what date?
If you go up right here, where's the date? Right here.
May.
Months old, 2 months old.
Yeah. I mean, that's the best you can get in,
Yeah.
in a 13D, 13G, 13F regulated world, right? But yeah, and then he has Netflix shares, but you can see where his conviction is. It's in uranium and silver and puts on indices, right? His portfolio is painting a picture of what he believes.
He's getting ready for the big one.
Yeah, just like how like our consumer habits, how we spend our money, our disposable income, is just like a representation of how we live, right? I like to wear the same thing over and over. I mean, I don't really, but I prefer to not focus on like what to wear for the day. I focus on the work, right? So those are things that you can kind of see to kind of just get a feel of what they want to do, and this is his portfolio. I've listened to the group, I studied them, I respect them, so I respect his portfolio, and I might want to participate on the same bets as he has. I don't know if you guys have any questions on that.
To me, a long term.
These are long term, yeah. High conviction, long term, super duper long term. But it seems that he's just betting that the way he's betting it, in the way the markets are moving today, right? I mean, previously, November, December, it looked like it was a nice play.
He's certainly right on Russell, right?
You think so?
I think if
Currently,
if
yes.
You're seeing it from May, right?
Yeah.
On May 15th, the market was on a downtrend. He might have made a quick profit and completely reversed his position since then.
Might have. Yeah.
Might have. So we don't know. He could have filled something else, but this is probably not the complete picture. But it's a nice enough picture to kind of get
Yes.
an understanding of what an investor would do. So for the new people who don't know what this is, I use Guru Focus. This thing costs about $1,000 a year, but it gives me access to 30 years of financials, what money managers are holding in their portfolio. We're talking about ratios 30 years back. So imagine you can see the PE ratio, the gross margins, profit margins 30 years back. It's useful. It's more useful than, I guess, looking at the financial statements, in my opinion. Anyways, moving on. So that's my ticker for the week, I guess. Silver, we already talked about. Cryptocurrencies. starting to tighten up right here. If you look at the more technical chart, it's hanging out at the 20-day moving average. If you feel the momentum is still there, I think the momentum is still there. I personally think the momentum won't be dying in cryptocurrencies until we break the 50-day moving average, right? And then if you were to use like a Fibonacci retracement, we're right above, we're in the red to yellow area right there, if you see. So to me, that looks pretty bullish. And if you look at the retrace, right, from swing low to swing high, it retraced right to right here, which was a nice buy. Would have been. I didn't participate. I'm being patient here. I want to get back in at the 50-day moving average. So we'll wait and see. This week's highlight, so this is a video right here of Trump saying Fed doesn't know what it's doing. Well, I don't know if you guys watch CNBC or Bloomberg, but I just thought this is so meaningful for people, I guess, who don't understand global macro. But it's just, if you're the president, you kind of represent the government and maybe the central banks. But to say that your own central bank doesn't know what they're doing is sort of disrespectful to maybe the rest
It's
of the
the
world.
4th of July sale at Ace.
Kind of
Save with great
deals.
deals.
Platform. So we'll watch this for a quick minute. Did anyone see this though? You saw it? You actively trade or you just watch the news? Okay. I know we have new people in here. If you have any questions, what we do in here, or feel free to ask anytime. I'll give you like a quick introduction. Because I do feel like it's kind of weird. Like you walk in for the first time, you're like, oh, I don't know what this is about, but I'll try it out. And maybe like a little intro might be nice. Anyways, let's see.
An intro would be good.
Sure. Let's watch this and then I'll do a quick intro. 5
We had a
minutes.
great
Less than 5
this
minutes.
morning. I think it was 224,000 jobs. Those were really unexpectedly good. And our country continues to do really well, really, really well. So we're very happy about it. I think we're going to be breaking records. If we had a Fed that would lower interest rates, would be like a rocket ship. But we're paying a lot of interest and it's unnecessary, but we don't have a Fed that knows what they're doing, so it's one of those little things. But if we had a Fed that would lower rates, you would have a rocket ship. When President Obama was here, he paid close to 0 interest rates. I'm paying real interest. And yet our economy is much better than it's ever been. From election day, we're over 50% increase. And we've made...
So when you listen to the president, right, he's a billionaire as well. You kind of get a sense of like someone who understands the financials. And if you study finance and economics long enough, you're going to start to see that interest rates mean a lot. And the way we decide to fluctuate interest rates up and down, it hurts everyone else in the world, right? Higher interest rates means higher dollar, means a lot of pressure on the rest of the world. So stocks like emerging markets, right, like Chinese securities, they'd be declining pretty hard. But this is just a really nugget piece of knowledge, in my opinion, a golden nugget of knowledge, just to kind of see what he sees as the pilot, right, of the country. Anyways, quick intro. Welcome. 2 new people, 3 new people. I'm the enterprise guy. I know it's a little cheesy, but it helps people remember me. But anyways, I've been running this investment club for 2 years, 6 months now. I started because I left the world of finance because of trading conflict or conflict of interest. If you work in finance, they don't really let you trade. So I decided to start an investment club. 3 guys at Starbucks kept teaching, moved to Milpitas Library. It got too full, so I ended up researching another location. And I found this office, Keller Williams. So I ended up getting a real estate license. And then now I'm in this office teaching, continuing to teach. But it also sharpens my skill set. And now it's been 2 years, 6 months, I think. 2 years, is it 6 months? Something like that. And that's pretty much where we are today. What do we talk about in this investment club? I think initially it was more focused on just stocks, right? Trading options, swing trading, maybe day trading. But it's just after 2 years, every Sunday, you kind of evolve your thinking, right? And so now I like to joke, and I know the engineers will understand this, but I just like to say it's an end-to-end investment club where we really talk about everything. It started off with stocks. The way we analyze the financials helped us analyze other things like commercial real estate, small businesses. We were talking about small businesses earlier today, about the different valuations that you see in like small business and middle market to enterprises. We talk a lot about venture capital as of late. Just because I feel that technology is getting really substantial and is influencing the way we live, right? And so today's discussion is going to be based off that. So the beauty of this club is that, not only do I get to meet a lot of people who want to learn to invest and talk about investments, but it also helps me keep the pressure going and keep learning new things. So I try to keep it going. So
How in depth do you get into like some of the small cap companies where you're exploring like large growth opportunities? You guys really look at
Yeah.
management and all that stuff.
Yeah,
and
yeah.
all that?
So we'll flip around this class. It's like this, man. We'll go from like micro to macro, right? So I think when you came in here, you heard a lot about global macro, like the dollar and stuff. But then we also get into like, just hyper focus into security. Let's say like Slack. But I think you're talking about smaller securities, right? Like small cap, micro cap.
Mhm.
Yeah, we talk about. There's a few lectures where I did talk about penny stocks and short selling them.
Maybe not that small.
Okay, not that small. Okay, all right. So small cap. So the one that I just talked about earlier today, OBNNF, it's Osico Mining. So it's a
I
world.
missed that one.
Yeah, so that one's a small cap, 600 million. Well, maybe micro, slightly above micro cap to small cap.
Okay.
So that one we talk about. That one has substantial upside based off the world-class mining team, I think the ore body they have, and so forth. So we go across the board, right? We like to have a bias towards technology stocks just because they run a lot, but they run on like no earnings. They just run on sales. So that, and then like positioning in with options. We look at futures. I don't trade futures, but I look at futures from the perspective like what's going on in the world, right? So let's say if you go home and the markets close at 1 p.m. and you want to know what's going to happen tomorrow at 6 p.m., you can look at futures. Look at what's going on in Asia, what's going on in Europe, and so forth.
So you have a pretty nice presentation. Do you put these on your Meetup page?
Yeah, so if you guys want to see the presentation, today's 40 pages, so it's going to go a little bit longer. I do apologize. I send it out to a group chat. We have a group chat right here.
Okay.
It's growing pretty big, but just shoot me a text and I'll add you guys to the group chat. It's getting pretty big, so I try not to, when I text, I try to make it productive, so it's not like blasting like 50 people at once. I know it's, better if we kind of evolve into Slack, but that's where I send it after. But if you just don't want to join and you just want to see the deck, just shoot me a text, I'll send you the link.
Okay.
It's all in the cloud. So we keep it on the edge here. All right, I like to joke and say, and I'm stealing this from Microsoft Venture Capital arm, it's called M12. They say, we like to keep our head in the cloud and live on the edge. I gotta say, I like that quote a lot. It's an engineer thing. Live in the cloud as in like cloud infrastructure, software, application software. Edge is IoT, right? So the reason why we got into venture capital is because when we look at securities like Workday, SAP, well, no, not really Workday, SAP, but Splunk, Sumo, well, Splunk, I'm thinking Workday because I'm thinking of Slack, the ticker symbol is work, but Slack, MongoDB, a lot of people don't know, but you could do a private market analysis and you'll see like Greylock, Sequoia Capital, KPCB, Excel, Andreessen Horowitz, all participating in that security in the private markets, that when it goes public, these guys sometimes have a longer term view, and so they have a lot more upside, but people don't know how to measure that upside, right? So we try to capture that, but it's not as easy. So primarily, my favorite securities to look at would be like these right here. So let's say MDB, and this is all for educational purposes only, all right, guys? So this is MongoDB, right? So database 2.0. I do like Workday. So this is like enterprise level HR software. Viva Systems, which is Vive, right? This one's life sciences software. So we're primarily a software investment club in here. I was gonna say group, but that sounded too organized, which we're not. So these are securities that I like, and I like to, trade some swing options on them. So like long dated calls, mainly 6 months. I mainly trade 6 months. 3 months it starts to deteriorate. So that's what we like.
Have you looked at data as well? Tableau?
Yes, data got acquired by Salesforce.
Yeah.
So this one just went
That was a good start.
straight up. That was really nice.
Band,
Yeah, that one was part of that guy's portfolio, right? Was it that guy? Yeah, you saw it. You saw it. You got an eye for it. Yeah, so Band looks good to me too. I need to do a little bit more research. But now, when we look at these securities, you have to understand they don't have PE. Well, this one has a PE ratio, which is good. It's slightly profitable. It's software as well. Yeah, so you kind of just have to understand the valuation of this space. Yeah, we go everywhere. I kind of went a little too long on the intro. Is that good enough? Can we go? Okay, all right. So that was the highlight of this week. Fed doesn't know what it's doing. Employment payrolls, it beat. So this is the chart right here. Every first Friday, it gets released. Just something to note. Anyways, let's jump into it. So, Internet Trends 2019, guys. This is the legendary report that I love to read every year, and we read it for the purpose. The purpose of this report is to I put a light, align ourselves with the secular trends related to the internet and digital economy, so that we can develop a robust investment thesis around the moving economics, right? So they're going to talk about like the Chinese internet or the trends in, I was saying, people creating more images, right? So Snapchat and all that. It talks all about that. And if I could kind of get your attention over here real quick, the valuations of the businesses, right? When we talk about small business, small business to middle market businesses are 2 to 10x. And then if you go over to enterprise or publicly traded companies, it's about 20x, right? But what we're going to talk about here today is around this area right here, the frontier of technology, the frontier of businesses, the new and hot businesses out there, not so much the old and I shouldn't say dirty, but just the old laggard businesses. But we switch around because sometimes a laggard business provides great earnings, great dividends. But yeah, anyways. So the report, Internet Trends 2019, Bond by Mary Meeker. If you don't know who she is, you should look her up. And this was June 11th, so very, very recent. All right, this report is a slide deck of 330 slides. I don't have 330 slides. I guess I have about condensed into 40 pages on Word. But that's who it's by. She's the go-to. She's like the top tier VC to kind of listen to and just kind of gauge where she sees upside. She's also invested into Canva. Canva is like a new tool that I discovered and I really like. I don't know if you guys use Canva. Okay, well, more on that later. Anyways, the excitement, smiley face. I had to read that out. 2019 context. Context is everything. Do you guys know what that means? Context is everything?
It's perception, right?
Yeah, so we got a chair. Well, at this point, it's BYOC, dude. You gotta bring your own chair. But no, you can really grab one out there. That's okay. You don't have to sit right there. You get to be near the donuts.
There's a chair here.
Oh. Okay. That one's broken, but you can still sit on it.
There's one over here.
You could try sit on it. Yeah.
You can try to sit on it.
Yeah.
There's one over here, man, actually.
Oh, there is?
Yeah,
Okay.
I think it's not broken.
Okay, so I promised you guys, it's just the first 2 slides that are super wordy, so I'm going to read this to you, but after that it's mostly charts and pictures of like where the bigger trends are going, okay? So this is the most wordy part of the presentation. We use data to tell stories of business-related trends we focus on. We hope others take the ideas, build on them, and make them better. At 3.8 billion, okay, the number of internet users comprises more than half of the world's population. Only 51% of the world is online right now. There's still another 49%, so there's upside there, right? When markets reach mainstream, new growth is harder to find, right? As evinced by declining new smartphone shipments in 2018, we saw that in Apple decline, in iPhone sales. While e-commerce continues to gain share versus physical retail, growth rates are slowing. While internet advertising growth is solid and innovation is healthy, there are areas where customer acquisition costs may be rising to unsustainable levels. So the cost of getting new customers increasing. This is not good from a global macro level. While internet user growth is slowing, I'm right over here, global innovation and competition continues to drive product improvements. New types of usage and monetization strategies, especially in the areas of digital video, voice, wearables, on-demand, local services, and traditionally underserved markets. Outside of USA, we focus on especially high growth and innovation and data-driven direct fulfillment and financial services. Let me pause right there and ask you guys a quick question. Does it make sense for a venture capitalist to invest in like a restaurant?
No.
Why?
Low multiples.
Low multiples, right? No global scale.
You can't scale.
Yeah, so that's the most important part about a VC investment. It has to scale globally, right? A VC would not invest in a restaurant that scales locally. All these projects needs to be global. Slack, Workday, SAP, Oracle, those are all global businesses. We highlight massive global usage changes related to the evolution of images and interactive gaming as communication tools and the broad emergence of freemium businesses at scale. Freemium is becoming a thing, right? So this report is really talking about technology, how it really changes our way of living, influence how we are today. right? There's people on their phones and laptops in here today. You guys have access to like so much data that you never had before. It's incredible. And the things that could be built off of. You guys recall what I like to say is that if you decide to build an SMB today, you're building a business that's on physical infrastructure that can't scale. You're limited to that parking spot, the capital equipment, the workers, and then like let's say the coffee beans if you're going to do a cafe. Your reach is limited, right? Versus if you do like software for, I don't know, coffee supply chain, well, you go global. So that's the beauty of it. The rapid rise, oh, and the other thing I want to mention is that now the other sophisticated business from a consumer perspective is the phone, right? Because this thing is, I was talking about the physical SMB infrastructures, the physical location. This is all data center and software in between, right? Sophisticated data center. So sophisticated network, like Arista network, storage, like Pure storage, computing, like Intel, AMD, and so forth.
What do you think about industries that have just strong momentum, like autonomous vehicles, for instance? Something that
They don't have earnings. Yeah, that's definitely on the frontier. So I like it, and it's also, if you think about long enough, corporations have to eat, right? So like everyone else in here, we need to make money, right? We want to make money. Well, corporations have a bigger appetite than you do, right? Because you're thinking like, oh, I want to make maybe $1 million, but corporations are like, all right, we got to find the next $1 billion industry. So it's great to, just like how I align myself with this, the way the central banks are betting their money. If they're buying gold, I want to buy gold too. I also align myself with how corporations are betting their money. So when I walk into like, let's say a Best Buy, and I notice the kiosk stand, they have Google Home products, Apple Home products, Home IoT, then I want to bet in that direction somehow. I could bet by investing directly in Google, or I could bet by, sorry, I'm going to mute somebody. I could bet by investing in Google, or I could bet by directly starting a business related to IoT and get acquired out, home IoT, and get acquired out by one of the big corporations.
So then the strategy really is to sell things that are completely abstract. Software, advertising, business models.
I mean, you want the best of the best, or?
Is that the idea of,
The idea is really, so if you want to, so this is what I perceive in terms of getting rich really, really fast. It's really, it's not going to be work. You can make $500K to $1 million a year, work 10 years, and you probably won't get far. And you won't be billionaire status like Warren Buffett, right? To get billionaire, like, okay, so a lot of people, when I meet them and I get to hear their story, a lot of people are chasing a small business idea, and they just don't know it yet, right? Like, if you want to be an Instagram influencer, right? I know one, 120K followers. She didn't realize that she's a small business because she's kind of capping herself out. She can't earn as much as an enterprise. So if you want to make that big time money, it's always related to a VC scalable investment or buying something that a lot of people want, such as shares. Right? It's always buying something and it's offloading it to someone else.
Okay.
It's I hate to say, but like real estate,
not a physical thing.
it could be intangible. And with the new digital infrastructure that we have today, where software is so key as a digital asset, you probably heard this already, but why is Facebook a $500 billion plus company when it sits on the hardware of Apple? You know, right? You have to sit on top of infrastructure today. If you want to be an intelligent investor as well as an intelligent business owner, leverage the existing infrastructure. That's what I would do.
Because just
Yeah.
So if you
I've been waiting, man, all day.
so what all of this is all about is about how are people spending money, which makes companies profitable.
Yep.
Okay.
Yep.
So just think what's happened over the last 10 years. There's a fair number of people who no longer use taxis at all, who will only use Lyft
and that's built off of the car infrastructure.
No, but just
the
think
taxi
how that's
infrastructure.
changed the
Yeah.
way that you spend money now. The taxi business is in the dump,
Yep.
right?
Yep.
But think about this. The typical evening, you get food. You might get food delivered to you. You might go to a restaurant. You might make something at home. You have to eat, right?
Yep.
And look at this. There's a possibility that drones might start to deliver food.
Oh, yeah. Big time.
Instead of
Big time.
the GitHub home delivery type thing.
Mm-hmm.
So if you really believe that 10 years from now, a social norm will be, I'm going to get food delivered to me by a drone. That drone market has barely even started.
Yeah.
Right? It's even in its infancy. So look at the food chain now. Okay, the drone business. Who makes the drones? Who makes the components? Who makes the infrastructure? Where is all that money going to be spent?
Yeah.
Which 10 years from now might be just as relevant that I probably will never go to a hotel again. I'll use Airbnb or Maui condo by owner or whatever. It's the same thing. The way that people spend money 10 years from now
It's
will
going to evolve.
influence
It's going to
the
evolve.
profitability of companies.
Yeah.
So if you really thought that you could single out, here are 10 companies that are part of the food chain of why drones will change your life and become relevant 10 years from now, that's a good place to bet your money that the profitability will come in that segment.
It's a really interesting perspective because it actually touches on the transportation market overall. Drones being that's a delivery system, but if you're talking about, just cars being a people delivery system as well, is it like, do the manufacturers have a good profit margin in that market, or is it really the people giving permission for it to happen have the profit?
Typically,
so
the
let me
people,
just continue
typically
for a
the people who sit on top of the infrastructure have the best margin.
So-
Facebook has better margins than Apple.
Right, so Apple makes this stuff.
Yeah.
You're saying their margins are worse because they have the overhead
Physical
involved in making
limitation.
this stuff and
Yep.
distributing it.
Yep. Software is, that's why I'm a software guy.
Okay.
I don't know if you noticed SaaS up here is like 15x compared to like everything else.
So people are thinking about autonomous vehicles. Some people like myself think there's no way that technology will be perfected anytime soon. Enough to be safe enough for the average person to get into a car with no driver and drive in the city. I mean,
10
some
to
are
15
skeptics, some may
years.
believe it. But if you're the CIO of Walmart, you're now thinking, wow, I can put my warehouse anywhere.
Out to the right.
And I can have trucks now deliver at 3 in the morning up till 8 when there's no traffic and
Yeah.
predictably reduce my warehousing costs now because I can put them anywhere.
So
And
where do you put your money to make money off of that?
So now look again to the food chain for the autonomous vehicle technology. If it's not just simply Joe Consumer who doesn't drive anymore, who gets in the car and reads the newspaper, if you believe that the average truck driver is going to be displaced now, and that warehouses could be anywhere, and that fleets will no longer be some guy sitting on a truck for 10 hours, it'll be a series of 10 trucks with one driver and the rest are following and so on. Look at the infrastructure that drives that. What are the companies that are going to make money on the autonomous technologies that may not be Joe Consumer, but even if half of the business of the next 10 years was automated, that's a big number.
Yeah.
And now, so
Yeah.
find that food
Yeah.
chain.
And
And
So
it does exist
the
today,
answer is-
yeah.
The answer is actually here in Silicon Valley, I feel.
yeah, absolutely.
Right? I don't want to pull up the Battery Ventures report, but okay, so I'm going to say it again. But 45 billion total venture capital in software around the world, global. 45 billion deployed in investments. Of that 45 billion, 38 billion is in the United States. Of that 38 billion in the United States, 20 billion is in California, in the Bay Area. Not California, in the Bay Area.
So
Right.
Is it in a couple companies?
No, it's just the deal and so the deal volumes here in terms of venture capital investments and the dollar value.
Okay.
Basically, what that means is like there's a lot of handshakes, that's volume, and a lot of big time handshakes, $1 billion, $1 million, $100 million, $100 million here in the valley. So your chances of meeting a VC, you have proximity advantage, because I complain that we pay a premium to live here. Might as well take advantage and go meet a VC, go network a VC, break into that system, right? So that's why part of my other venture now is to build out Enterprise Adventures, which is a little community that I'm working on. But yeah, today we're going to be focusing on mostly frontier technology, mostly frontier business models, because that's the internet report. That's why I like Mary Meeker, right? Other times we talk about mostly enterprise, so securities that are already in the markets. But yeah, when we look at the stock market, we do kind of have a bias towards software stars, which are basically frontier. The other thing I want to say, add a note on top of what you said earlier about Uber and Lyft. Think about the way it's not just investment opportunity, but also disrupting the way of life. We're evolving, right? I don't know if you recall the first slide, but humans today can't adapt to the level of technology growth. Technology is advancing quicker than the way we're able to adapt. So if you think about it, we hop in a car with a stranger today to get around,
Yeah,
right? You wouldn't do that back then. You wouldn't do that 10 years ago.
absolutely. A good reason to say don't sell your house anytime soon,
Yeah.
by the way, because if that graph is showing
Yeah.
technology growth
Yeah.
doubling, tripling, and
You
so
could
on,
turn- you
you
could-
live in the center of where that is coming
And
from.
you could turn your home into a business more likely today with the infrastructure than ever
It
before.
just means when millennials are having a tough time with rent now,
Yeah.
that's not gonna get any easier.
Yeah.
So
Yeah.
get ready for values in this entire 415, 408, entire area.
Yeah.
If that graph keeps going over the next 20 years,
Yeah.
property values will go up another 50%.
Yeah.
Because there's so much money to be made by that AI tech company that goes public in the Bay Area and cranks out another 1,000 millionaires who now have another 500,000 to put into a house.
Speaking of AI or homes, I got a motivated seller at 1.1 in Redwood City. Comparables at solid 1.6. If you want
there
to
you
take a
go.
look at that. Yeah, we can talk about that after you want. But the other thing, so yeah, technology is so key, and it's just changing the landscape really, really hard here. Like if you look at Warren Buffett, he invested in a time when industrials were hot. So if you focus on industrials, it's the thing. But today, I believe Robert F. Smith, one of my idols of Vista Equity Partners, I don't know if you heard of them. That guy's my idol. He's probably going to be the Warren Buffett of my time, right? The momentum Warren Buffett, right? So if you don't know, I'll show real quick. So Mary Meeker is another well-respected person that I like, but the other one is Vista Equity Partners. All right, and I'll also do Robert F. Smith. Because the thing is, just like Jim Simons, the quantitative hedge fund manager, whenever I look at stocks, I always run into Jim Simons. He's in every position that I like. This guy's in every single startup that I try to buy, right? He's the guy who made $3 billion in 2 years, meaning he made $1.5 billion a year. And what he did is what I exactly told you earlier. We need to sell something to someone else at a higher price, right? I don't want to target consumers. I want to target enterprises because they're willing to bet a lot bigger. So he sold Marketo. He bought Marketo for, now I forget the numbers, 1.5 billion, sold it for 4.6 billion to Adobe, right? And if you look at the stock market long enough, every day there's billions and trillions of dollars moving around. We just have to spend money. Money needs to flow. It doesn't sit still. Even when you make a lot of money, yeah, you think it sits in your account, but it's in I don't know, a bank savings account or whatever, being moved around. Money's always in motion, right? So the trick is to kind of figure out where to allocate it to capitalize on the next moving part here, moving economics I like to think of. So I'm going to finish reading this. Again, it's just one of 2 slides that are going to be super text heavy. So where was I? The rapid rise of gathered, analyzed digital data is often core to the holistic success of the fastest growing and most successful companies of our time around the world. I got to read that once more, right? The rapid rise of gathered / analyzed digital data is often the core to the holistic success of the fastest growing and most successful companies of our time around the world, right? This is key. This is extremely key. Context-rich data can help businesses provide consumers with increasingly personalized products and services that can often be obtained at lower prices and delivered more efficiently. If you go to a marketing class today and they teach you about marketing, and I'm not trying to be mean, but they teach you about marketing in a sense where, these are textbook marketing. The textbook today is so lagged that doesn't acknowledge the new emerging class of marketing, influencer marketing, right? Because Facebook became that 500 billion plus top 10 biggest company in the world to a point where it influenced the way marketing is done from a micro level, right? So now I'm seeing influencers becoming, like enterprise money is flowing to influencers on Instagram. So if you have like more than 50,000 followers, they'll pay you that just to talk about the product. They'll pay you some money. It's crazy, and it's untapped, and it's I don't think I mean there's now that I see it better. There's many different generations, and everyone's operating in a different time frame. So I'm just showing you the time frame today. It's kind of more in the upfront. Did you bring your own chair, Naveed?
Yeah, I did.
So I didn't see you for like two to 3 weeks when gold went up. So I was just thinking like you probably don't need us more. Well, welcome back, man. Anyways, so data is key to the success of future companies, right? You could take this as a business operator or a frontier investor. So that's why we're talking about the valuation of Slack, right? This thing's Slack's okay. There's a balance sheet value, but if you look at Uber and Lyft, there's no balance sheet value. They're completely zombie companies, but yet they're trading at billion-dollar market caps. So how do we play this as investors? I think it's a buy because they have a monopoly on the transportation data, consumer transportation data. That's the issue, right? Like, I don't know if you've heard, but so my background's in finance, but the greatest minds today are actually moving out of finance and into technology. right? And we could observe this by looking at Goldman Sachs hiring trend. They're at 50%. They have they're focusing on hiring technology investment bankers. I'll show you that chart at the end. It's a lot of repeat for the people who already come here, so we'll continue to plow away in this one. So let's see, where was I? This in turn can drive higher customer satisfaction. Better data-driven tools can improve the ability for consumers to communicate directly and indirectly with businesses and regulators. Core constituents, consumers, businesses, and regulators are increasingly drinking from a data fire hose. And management challenges continue to rise for all parties.
Absolutely.
Right? So the need for data scientists is growing. And I have parents who tell me, you should pursue this career as a doctor and stuff like that. And it's funny because when they say you should be an engineer, typically when they say that, oh, I should be an engineer, then that means software companies make a lot of money, right? So that's like I pay attention to that stuff. But a lot of the things that parents say, I feel it might be a little bit outdated. So just think about that. Broad awareness. Did I read this part? Yes. Broad awareness of challenges and related vigorous, heated debates can be the step in driving change. Context of today, part 2 of 2. I know, it's wordy. Consumers are aware of concerns about internet usage overload and are taking steps to reduce usage. Leading USA-based internet platforms have rolled out tools to help monitor usage and social media usage. Growth appears to be decelerating following a period of strong growth. Privacy and problematic content concerns are also top of mind and are following similar patterns. So as we are being introduced this new technology changing our way of life, right? People are on social media, shopping on Amazon, using Google to search and stuff like that. Have you guys noticed that Apple released the feature where it counts like how much you use your phone for the week? This is a growing concern, right? And I'm seeing that with like Generation Z, there's a book out there, it's called iGeneration, or iGen, and it talks about Generation Z. I'm Generation Y as a millennial, right? So anyone older than me would be Generation X. So, and then after that, baby boomers, and then the silent generation. So silent generation, baby boomers, Generation X, I'm Y, and then Z. Z today would be 22 and below. Their first phone ever was an iPhone. My first phone was a flip phone. Think about that, right? So they have access to some serious power here. And it really changes the culture, society, and all that. So if their first iPhone or phone is an iPhone, a touchscreen with internet enabled, communication enabled, Wi-Fi enabled, then how it influences them to invest in the future, cryptocurrencies kind of make sense. That's just one of my opinions, right? Or they're going to build a business on a phone in the future, and they're going to capitalize like crazy. So I want to pay attention to that because I want to capitalize too. I want to join the fun. Anyways, where was I? Darn. Consumers are aware, okay, we read that. Owing to social media amplification reveals reactions about events can occur quickly, resulting in both good and bad outcomes. In markets where online real-time rating systems exist, accountability can be improved versus offline options as consumers and businesses interact directly while regulators can also benefit. Rapidly expanding connectivity has helped amplify voices. Our voices today are able to be amplified, right? When I post on LinkedIn, because I'm a 1% person on LinkedIn, I'm able to reach like a lot of B2B people on LinkedIn. And so I had a chat with actually that guy. So I had a chat with a guy. I can't even say his name. It's a Middle Eastern guy. So if you know the Middle East, Saudi Arabia, or whatever, it's ruled by 7 rulers. And so
that guy.
yeah, so one of the rulers is like Abu Dhabi, Saudi Arabia, and so forth. So I spoke to the CEO of the private family, who manages the private family office of Abu Dhabi on LinkedIn, right? So my reach is amplified. My voice is, I wouldn't say it was amplified in that moment, but my reach is definitely amplified. My voice is amplified when I post on LinkedIn. Because when I post on LinkedIn, I get like 3,500 plus views, and the views are coming from, on IG is like, these are nothing. The 3,500 is nothing on IG, but on B2B LinkedIn, right, Microsoft's biggest acquisition at 26 billion, 3,500 venture, let's say of that 3,500 people, venture capitalists, business strategists, chief executive directors, partners, and so forth. Those are very high quality contacts. So I'm able to kind of book a meeting, maybe once a month with like a hedge fund manager and so forth. So this week was actually, if I did a little update, I had a hedge fund or a fund call me, a fund manager called me. He cold called me. And he was like, hey, is this the Enterprise guy? And I was like, yes. Yes, it is. Like, like it's actually working. And he was like, hey, I have this company. It's called Croissant, and it's basically the B2B version of Airbnb. So Airbnb is B2C when people want to go travel and live in a certain place for an extended period of time, right? Croissant is more of like a B2B. It sounded like a B. I didn't go deep into it. You sent me the presentation, but a B2B Airbnb where people who want to kind of come together for a project for a certain amount of time, and they don't want to deal with like commercial leases that are more than like 6 months. Let's say you got a project for like a month, and you only need the place for a month. So, again, software building on top of existing infrastructure, commercial real estate, right? Just like how Uber and Lyft building off of existing infrastructure. Cars, right? It's just like how you should be building a business off of existing infrastructure. The crazy, powerful device on your mobile phone or your pocket. Yeah, so that's the interesting stuff. Rapidly expanding, okay, we read that. Finding the most, this has brought new focus to an age-old challenge for regulators around the world, finding the most effective ways to amplify good and minimize bad, often resulting in different regional interpretations and strategies. As internet systems become increasingly sophisticated, data-rich and mission-critical, so has the opportunity for cyber attacks, right? Cyber attacks, we think about BlackBerry, Carbon Black, and CrowdStrike, right? Those are the AI cybersecurity. That's only 3 that I know are out there. Man, that's like a, that's actually pretty good then. I mean, if they're the only 3 that I know of, if you guys know any other ones.
Fire,
Is it AI focused?
maybe not yet.
There's another one called Truth which is
Yeah. So that's a segment that we got to pay attention to in terms of our investment efforts and business operator efforts, right? We are in a new era of cybersecurity, exclamation point, where technology issues are increasingly intermixed in international diplomacy and defense. We focus on the impact of the internet on work via on-demand services and remote options. Education and healthcare, the materiality of current trends imply inflections are occurring, not happening, are not about to happen, they're already happening. We update USA trending around government finances and the importance of immigration to the technology sector. Okay, all right. Those were the 2 heavy text slides. Let's move on to the next one. So context. Those 2 slides were just about context. Context is everything, right? In trading terms, it's time frame. I think time frame is everything, right? Are you trading when the stock's experiencing momentum, or are you trading when the stock is just going sideways, right? So that's time frame in trading. But context is, well, are you trying to sell me female clothes when I'm a male, right? The context is not right. We have to really understand, like, I'm trying to think of a good example. What did I put right here? Context is everything. Where are we currently in this world / time frame? The world is changing, evolving fast. The end user and everything is evolving. You know what? I'm just going to skip this part because I forgot what I was going to say. So we'll go to the next one. Okay. So global internet users, guys. Internet users is more than 50% global penetration. New growth remains harder to find. What does that mean? This is the internet penetration 2018. So back in 2009, 24%. Now we have 51% online. What do you guys think is the, 10 years from now, what do you think is going to be online? Well, it's probably going to be exponentially higher, right? Yeah, so there is some upside. This would tie into any internet investment that you have. Software is basically internet at this point. Cloud, SaaS, that's internet. So there,
Satellites.
yeah. So there's still a lot of upside. So this is just something to pay attention to. Man, if only I knew this. Okay, I was too young to know that.
You're still in high school back then.
Let's see, global internet user growth, okay? Solid but slowing, 6% versus 7% year over year. So internet users, this is the number that's growing, but the growth itself is slowing down. Global new smartphone unit shipments declining 4% versus 0% year over year. So shipments are declining, right? And I drew 2 lines. One is the Android and the other one the iOS. So primarily the majority of the world operates on an Android device, not an iPhone. Pretty interesting, huh? Think about how can we capitalize on this, right? This is negative news for Apple, negative news for Samsung. And if you look at Samsung, then this might be negative news for like those semiconductor companies. Sorry, I tend to pick on you semiconductor guys, huh?
This has been happening for a while.
Yeah. So this is not new. For the people who come here regularly, this is not new, right?
So I guess the question is this the optimal way to access the internet? It's
It's-
a phone, it's a thing you put in your pocket, but is it really the ultimate way we're gonna access information?
Yeah, so there's actually some interesting stats that are going to come up. It's going to show you that the interaction with consumers and devices have mobile devices have surpassed desktop devices. So I can't tell you if it's optimized as the final answer, but I can tell you from the global use case how we use it, decide to use it, it's pretty optimized.
But the way these companies would respond is by developing something
They are.
that's more user
Mobile,
friendly.
yeah, they are. Mobile iron is mobile.
But you know, from the people in the room, I mean, from an investment perspective, I
Yeah.
mean, just think of what you put down for internet growth, okay?
Yeah.
Think about Microsoft, highest valuation ever, highest profitability ever, biggest, most successful company ever.
Yep.
Salesforce.com, highest revenues ever,
Yep.
highest valuation ever, highest profitability ever,
Yep.
okay?
If I could have one dream.
So if you think that internet curve is gonna keep going,
It
it's
is,
not
it
a
is.
guess, right?
Man, okay.
How wrong could you be by choosing companies that are living on that growth curve?
Yep.
Salesforce,
Yep.
Microsoft, et cetera, et cetera. That's what I'm just saying. I mean, if you pick 20 companies, pick 10 of them that are the conservative Microsoft high cap, pick 5 of them that are more speculative, may become 2 or 3x and so on, and then 5 sort of fun, you know, maybe they'll become relevant type ones because they're not profitable yet.
Yeah.
You'll outperform the market.
Yeah.
So I mean that if you believe that the tech has not even close to being finished, you'll do well over the next 10 years.
Yeah,
It's either software or software infrastructure. And when you're stock picking, you ought to make sure that you're buying the company that doesn't get killed by the competition.
That's true.
That's
That's
it.
true.
That's all.
So, you know, you forced me to pull out the big guns. So I got the technical discussion number 117. I don't know if you were here that day, but that was like,
the Vista partners, right? And
wait, what?
oh yeah, this is
Yeah. So this was like my favorite
Batty Rank.
presentation, hands down. I think that was the one day you weren't here, and I was just like, oh damn.
Yeah.
Be fearless in the pursuit of what sets your soul on fire. Right?
Absolutely.
So that's the quote that we start off with that day. But going down is I wanted to show you the chart on the humongous internet opportunity here that's in front of us. So for those of you who don't know, this is the Battery Ventures report. They're a top, one of the high-tier venture capitalist firm located here in Silicon Valley, right? And you didn't see this, Bernard, but you're right about the. Oh, where's that slide? I think I passed it.
No, I think I did see that graph before.
Did
That was also featured on CNBC. The same graph.
Why are we long software? I'm looking for. Wow, it's pretty low down there. Okay, I didn't know. This was my favorite analysis. Okay, so this is the global software industry revenue. And this is where we are today.
Right.
Right? Just, I guess, maybe below $1 trillion. And this is where we're going.
That graph was actually in the Wall Street Journal. My mistake, on the page 2 of the Wall Street Journal about 3 days after you had this in the session here.
Well, this was a fresh. I pulled it right when it came out. So
Yeah, I know. It was
yeah, I love it. And then this is the performance of internet securities, right? So software is the same thing as internet at this point. SaaS, 1,200% return compared to S&P 500, Nasdaq, and Dow Jones. This was yeah. And then we got into the valuations and stuff, but that's the big gun chart right there.
Absolutely.
Anyways, going back to this. So smartphone shipment, nothing new, right? Mobile devices give internet access, and unit shipments are slowing, so maybe less. Oh, okay, all right. Well, got you. I'll send you that later. Let's see. Global internet users equal Asia Pacific leads. Okay, so in terms of like global internet users, right? So 51% of the world is online, but Asia has the most opportunity because if you look at North America, we're pretty much online already. 89% of people are online, right? So the biggest opportunity that at least I see from this chart, according to Mary Meeker, is Africa and Middle East, right? They need to get online, and Asia. So this is where the new investment thesis really develops. This is an updated 2019 analysis of, not just people online, but Chinese people online. This is telling me that securities like Alibaba, Tencent, Baidu, YY, all that, WeChat, they have substantial upside because not everyone's online, right? Look at what the online did to our economy when we're online over here. So this is The geeky. No, don't worry, man. This is the geeky chart. You guys like to distract me while I'm up here. Let me just flip this off. Okay. Yeah. So, China and Africa present the best online business opportunities. Therefore, we need to pay attention to Chinese internet stocks at this point. When I'm on LinkedIn, I get a lot of Indian people adding me from India every day. Every day, I think I get at least one. Yeah, and they're pretty active too. They got like 2,000 to 3,000 connections.
Because there's no LinkedIn in China, so it won't be.
Maybe.
So why are there no
Yes, too.
Asian or Indian software companies that have dominated the United States? So think about the United States. You know, you've got Salesforce and Slack,
Yeah.
and Facebook, all these American
Yeah,
creations,
yeah.
right?
Well, look,
How
we,
come there
look, we,
have been
we,
no
we sent manufacturing to Asia, so they're kind of building that laggard economy. And then why do we send it? We're building services. We evolved our services into
No, but
software.
there's a lot of smart people in Asia and India, right? So
Yeah.
why have there been no equivalent of Facebook, Slack, and Zoom and so on?
Yeah. So
outside of North
China's
America?
very serious about their data privacy,
Yeah.
right? For the
Actually,
software.
If you really look at it, the AI companies, it's dominated by Chinese right now. They are looking at overtaking America in China on the AI side.
Yeah,
True.
most of the tech papers are basically have Chinese
Chinese
authors
people.
in China.
Yeah, yeah.
So in 5 to 7 years, you'll probably see more Chinese AI stuff than here. And regarding India, it's a business model that was more of design services, fulfilling back-end stuff. Now they have to go from that end to making new stuff, which they're finding difficult right now. But it'll happen.
I just realized I'm only at page 8 out of 41, so we got quite a bit to go, guys. No, we're gonna work it today. If you guys get bored, let me know. I'll try to make it more fun. But yeah, so we need to increase our analysis work, or maybe even business opportunities in the Chinese internet. And when I do look around today, I do notice that trend when I'm looking at, I think Ray Dalio or what was the other guy's name? Ray Dalio and Paul Tudor Jones, his portfolio, right, on Guru Focus. I'm just thinking, like, why do they have so much like conviction on like Alibaba, Chinese internet? I guess Alibaba's only at 400 billion. It still has a lot of upside, so we need to consider those. Global, because Alibaba is going to be basically like the Amazon. I think they basically are the Amazon behind not WeChat, Tencent. But those are the two exposure that you could get. China and Africa present the best opportunity. Okay, I read that already. Global internet users, China at 21%. India, so this is a little bit more zoomed in, right? This is India right here. Non-internet users versus internet users in India. So for you Indian, huh?
This will rapidly change in India. They're putting everything online with biometric stuff. The government basically encouraging it. In the next 3 to 5 years, you will see a lot.
Now you also have to think from a business perspective, business sales perspective to consumers, right? What did you do the first time you got on the internet? Right? I mean, like, you did whatever you want, but this guy, the moment you got on the internet, you got access to a lot of information, right? And so it's like you might get there's business opportunity. Like they'll probably go for whatever business advertisement that comes up right away. Okay, all right, I shouldn't have said that. Moving on to the next one. So out of those Indian people adding me on LinkedIn every day. Okay, I'm sorry, guys. China, India, and Africa are coming online. This is probably the funniest session. Global internet market capitalization. So this is more looking into the numbers of things, right? Did you guys know? So internet market cap. So they had 2 of these, but I focused on the internet market cap. Global internet. So what I see right here. So Microsoft, obviously number 1. I think they're going to continue to be number 1, especially that they invested into LinkedIn. Bought it at a steal price, right? 26 billion. Seeing Facebook a B2B comparable at 500 billion. Man, I'd love to buy something at 26 billion and just work grow it to 100 billion plus. That's amazing. The other company I was talking to Barath this week is that I'm looking at this gold miner company, right? Ticker symbol is EGO, E-G-O. It's Eldorado Gold, and it's trading at 0.30 book value, right? So if I recall the numbers correctly, it had like, let's just say, it had I forgot the number. 0.3 book value, meaning it's like trading at 300 million when it's worth $1 billion.
With huge losses probably.
The losses were sustained, sort of. We could take a look later. But I'm thinking like if I was a mergers and acquisition specialist and if I knew geology or hired a team of geology, if I had funds, just research that company and it had 400 million in cash and it just looked too good from a big time investor perspective. Okay, a little digress, but going back to this. Global internet market capitalization. So you can see that the Chinese internet companies I highlighted right here, Alibaba, Tencent, I can't pronounce this one, JD.com, Baidu, NetEase, and Xiaomi is on the list. They're getting big, and I think they're gonna get bigger, right? Considering that their economy is not fully online, right? Do I have to go back up to the funny charts over here? Yeah, they're not fully online. And I think India presents a great opportunity as well, so continue to monitor that. So me thinking like Facebook, did you know that, if I recall the numbers correctly, like Facebook has like 3 billion or 1 billion people online, right? But only like a small fraction is like domestic. Most of it is like emerging markets. Most of the people that are online on Facebook are from emerging economies. So like Indonesia, India, I didn't know that. Yeah. Any question about this list? Do you guys think they can get bigger after like, just
I have one question. So I think we're actually looking at these companies which are already mature, right?
which is already mature?
Right.
Yeah.
So basically, now how do we find stocks, right? And how do we find companies which could be next Microsoft, right? Or which could be next Amazon. Right?
Yeah.
So I think that is because if you see here, you will actually see like, okay, it can actually now go from 1 trillion to 2 trillion. This is like 200% increase, right? In the next 5 years, let's say.
Yeah. Yeah.
How do we now actually take an opportunity and find like something like Shopify, which is 1000% increase?
Yeah.
So how do we do that? We actually find, okay, now where do I invest? Because okay, I can actually buy Microsoft stock and keep it there, but what?
Yeah.
What is going to?
So going back to what I
Thanks.
so going back to today is going to help align you to secular trends, right? And then from the secular trends, we will go break it down into more micro trends. So if I were to like draw out like what I mean by secular trends, so let's say this is the secular trend, right? And with the secular trend, it's up. So let's say that's just say internet, right? Within the secular trend, there's like going to be internal trends, like this. And you got to figure out, are you in this type of business? Or are you in this type of business, but you know the general direction is up. So the whole point of today is just to focus on blue line, not so much on how to capitalize specifically. Because specifically, you have to jump into Alibaba and do like a whole like end-to-end analysis, right? Look at the financials, look at the technicals, look at the management, look at the investments that they have, look at the cash levels. It goes on, and the products goes on and on.
Yeah, because execution is what matters.
Execution is what matters, right? And typically the guys who are well capitalized, like Alibaba and Tencent, and especially with tailwind from the government, right? These are government protected securities, basically.
Right.
So I feel pretty safe in that because you have just like how us U.S. companies have the luxury of like central banks printing money. It kind of acts as tailwind for our stocks to go up. This is like the same way, but they have also the I would say the good invisible hand regulation. Right? It's not really an invisible hand, the obvious hand.
So basically, this is to keep your portfolio safe, right?
Yeah, this is more robust. But I mean, like, look, we know there's not like most of it is like USA, right? There's only a few China. There's going to be China winners. We have to spot them. I can't tell you which ones unless we go in and do an analysis. But looking from the upside opportunity, it seems like Chinese security, emerging markets, internet software focus is like a very robust segment. And I see that when I look at portfolios like Paul Tudor Jones, he's going heavy on emerging markets, and Ray Dalio too, emerging markets and China. Like one of them, I forgot which one, has a super conviction on Asher, which is a Shanghai index ETF.
For companies like Adobe, where for example, they actually went from $200 to $300 now.
Yeah.
It's so quickly.
Yeah.
Right? So because of
Yeah, these blue chips will keep going up. It's just like these blue chips are like Silicon Valley real estate. That we print money, well, yeah, they're just going to keep going up. So looking at these securities, right? So what do they look like? So I guess to kind of answer your question here. Oops. Uh-oh. Where was I? Sorry, I dropped the marker. Oh, here we are. So this is Alibaba monthly. This is what the monthly chart looks like. Currently trading at 455 billion with 55 billion in sales. I don't think this company is going away. It's profitable. It's software. It's internet. It's also Alibaba Cloud. And if you understand data center infrastructure or cloud infrastructure, China is not going to let Amazon get in. It doesn't make sense. Like the way we have different countries and borders, they're going to do that with data, right? And I think like Europe kind of made a mistake letting Facebook in. Maybe I think about that. Like if I put myself in the position of a sovereign, I'm going to let this communications company from the U.S. across the water get my people to play, then it's like they got my data.
I think this has the biggest upside, just being held on because of the China trade deal.
Yeah.
Because if you look at the sales, it's 55 billion.
It's solid.
Not even 10 billion, 10x multiple.
This is the Amazon of.
That's a good point.
Amazon, right?
That's a good point.
Should be like Amazon at least.
This is the Amazon. Look at the sales. It's just like wow. And then they're profitable. Margins are pretty good for 54 billion.
But all the brands sell like US.
Yeah, and I think it's priced pretty well too. Price of sales at 8, PE is 35, a little high, but that's okay. It's software internet, consumer internet, and also they have Alibaba Cloud initiatives. So I know that there's going to be a Amazon AWS equivalent in China. I just don't know which one yet. Most likely Alibaba though, right? Since they have initiatives there.
Maybe that's why they're piling onto this, and we don't even know yet.
Yeah,
Start.
and most of investing right now, if you think about it, it's nothing new that we haven't seen here in the U.S. It's just we know it's going to be introduced there in China. So this is Tencent right here. It's not on FinViz, but I took a picture right here. Tencent's at 432 billion market cap. Seems pretty small. This was a nice decline and a retrace. Looks okay, not bad. Looking over at JD.com. I didn't know JD was so big. 45 billion market cap. That's huge. And it's 67 billion in sales.
What does it do?
It's the e-commerce. It's China's Amazon e-commerce only. So when I say consumer, right? Like there's a difference when you ever buy a commercial computer, it's a workstation. But when you buy a consumer computer, it's like Apple with the nice metal and looks so fancy. So this is JD where it's consumer facing for Chinese consumers, and it has to look really good. It's not like Alibaba. They wouldn't go Alibaba to buy. It's like it's all manufacturing stuff, right? So this is their Amazon experience. If that kind of makes sense.
AliExpress sends to manufacturers and stuff.
Yeah.
Businesses and this
Yeah.
send it to consumers.
So think about it as like we need a shop, right? You like to have fun, your leisure, shop on Amazon, right? But you wouldn't go and shop on, let's say, Amazon B2B, right? Where it's like, I don't want 1,000 units of this, right? So that's their Amazon experience. So JD.
Well, adding up that,
Sure.
JD is still not profitable.
It's yeah. Well, let's take a look.
And actually Alibaba is the biggest competitor.
Is it?
Yeah, they are
Yeah. So I
trying
think
to
you
get
know the
there.
space better than me.
Yeah.
Yeah. So they're not profitable yet.
That's incredible.
But this is I know the venture funding on this is pretty good. If you go to
List Bazan, Bizan.
say again, is that Bzoom?
Yeah,
Bzoom?
yeah.
All right, yeah.
It's similar e-commerce.
This chart looks good.
Yep. I just started rising, that's why. I mean,
Yeah, and it kind of fought off the dollar right here too. What was I gonna do? Crunchbase and look at JD.com. So yeah, I think when I started this investment club, I was pretty bullish on Chinese internet, and then I kind of stepped away because of global macro and the dollar fear. That's the only headwind I'd be afraid of: rising dollar for.
also the results might be unaudited. You don't know.
Yeah, that's the other thing. So
They're not regulated.
So the other money manager that I saw that has heavy exposure, high conviction to Chinese internet had a Chinese blue chip ETF. So Chinese internet blue chips only, which is a nice ETF if you think about it.
KWeb, CWeb,
Say again?
KWeb, CWeb, what are you talking about that?
I gotta go back and look that one up. Don't
So
know.
what's an ETF?
What's an ETF?
No, what was that ETF? The one that you're talking about?
I think it was probably KWeb, but it's Chinese blue chip. If anyone could Google that real quick, KWeb is China. It's China internet, but I remember I saw one that was China internet blue chip. So basically the Amazons of China. Baidu, this one's doing pretty bad, and it looks like it could probably go lower.
Strategy issue.
Say again?
Really bad strategy issue.
Yeah.
Strategy issue.
Yeah, I know I mean, they're pretty big in the sense that 40 billion, 15 billion sales, but they have like a venture arm and stuff like that. Just the charts don't look too good right now. To me, it looks like it could go lower. And then NetEase, this one looks pretty good as well, or it looks good right now. But maybe it could be setting up like a bigger flag right here, going down lower to 200. So be careful. Moving on. All right, page 10 of 41. Oh my gosh. Global internet market capitalization, leader revenue growth. So what was the difference with this one? Revenue growth slowing. Okay, so the other one were the specific players, right? This one's the revenue. So global internet revenue. It's slowing down from the red line, but this is the actual number. Right? How can a very extremely bullish segment like internet revenue slow down? So this to me is a global macro indicator. Well, let's see, when did it slow down? I marked right here, 2018, right? For Q1 2018. Let's look at the S&P 500. Yeah, if you look at the S&P 500 Q1 2018, so global slowdown, right? So this is why I continue to use the S&P 500 as like the beating heart indicator of like the world almost. Going over to e-commerce side, right?
Go back to SPY.
All right.
So it did go back up higher. That does not reflect on.
I mean, that's because of interest rate.
It kind of reflected right here.
But if you ignore the 3 peaks, it's still kind of the secular line still up.
Yeah. So we'll continue to see. Markets are kind of marching higher, so we might continue to go higher. It's gonna be a crazy environment, but I hope they lower interest rates, so my gold could go up.
Absolutely.
Right? It's lowering interest rates, devalues the dollar, destroys income.
We won't be 50 points anymore, right?
Yeah. But I'm still reading the gold report, guys. I'm not quite done with it. It's really big.
But one thing you have to be careful for gold is seasonally, I think summer months are, so I think we have to look at it.
Yeah, there's actually a back test.
Still
I should show you the back test chart. It shows you like all the, like back to like 1970 in terms of like which months are hot.
Yeah.
Typically, it's the Indian.
And then that will happen in
Marriage
September, October.
season.
Season
Yeah.
will go.
Yeah. So it's coming up. E-commerce sales versus year-over-year growth. So e-commerce sales are going up, but the growth is slowing down. So it's not going up as parabolic, right? But this is a nice chart.
You know, that's a good idea, you know, instead of giving the girlfriend the engagement ring, you give her like shares in Microsoft. That could change everything.
You lost it.
It's all about
Yeah, I mean, like, you know, you open the case and there's like a little Microsoft logo, and that could totally change everything.
It's 100 shares of Microsoft.
100 shares.
Yeah.
You only bought me 100, forget it. I mean,
Yeah.
like, you know, but yeah, that could.
It's something that's appreciating, right?
Yeah, absolutely.
So e-commerce is still growing.
I like that idea.
So you could buy her 24 karat gold. She'll be more happy with that.
That would work too.
Yeah, I actually started thinking about. I started thinking about buying gold jewelry as of late because I'm like, well, gold's gonna go up. I might as well rock some, right?
Gold jewelry, I think gold metal, I think the coin is better.
Yeah,
Gold
yeah.
jewelry, I think a lot of commissions in making.
Yeah. So 2010 versus 2018. Time spent in media versus advertising spending. Okay, so this is the desktop one. So this is back in 2010. The desktop time spent, ignore the blue one for now, but the red. So 25%. Today on desktop it went down. People are less on the desktop and more on the mobile devices. 33% versus before. So mobile is exploding.
Yeah.
If mobile is exploding, then we need to consider what, you know, software, you know, whatever, like Lyft and Uber are built on mobile. Have you used Uber on a desktop? That'd be hecka funny. Yo, let me order an Uber real quick.
Actually, when it first came out, I did that.
So I haven't seen that yet. So we gotta pay attention to this, right? This is a huge growth. This is like more than 3x. So we gotta continue to pay attention to what software, maybe even B2B software that's focusing on mobile. So Mobile Iron continues to rebuild that investment thesis, and Mobile Iron is grinding up right now. I have positions in that. Educational opinion only. I think my mouse is not.
What's the ticker again?
MOBL. MOBL. So mobile devices are becoming the primary devices. The gentleman that was here left, so okay. In addition, we have more ad spend in mobile devices compared to desktops. So not only is it the usage is more on mobile, but now the businesses are spending more money on advertising than that. So it's the classic television. Think about it, right? Television, we're not advertising as much anymore. We're doing desktop, but now it's going to mobile. So pay attention to who's selling you on this little device right here. All right, I got some notifications right here already. Bloomberg, this and that. In addition, we have more ad spend. Okay, read that. Internet advertising spend. Mobile advertising is going up. Meanwhile, desktop advertising is going sideways. So blue is the desktop, and this is mobile, right? So we have to really think about the economics here. What would be the knock-on effect of more mobile advertising?
You'll sell.
You could sell better, but then how? Maybe corporations need consultation services on how to do mobile advertising, right? That's a way to think about it. These businesses are booming, right? You can either invest in that or figure out how to capitalize. Internet, mobile influence the future of human to. Okay, I want to read this. Mobile is the winner here in influencing the future of human to technology relationship. Right, our future is going to be significantly mobilized. Internet ad platforms, Google plus Facebook lead, but others gain share. So these are the opportunities at hand. Select USA-based advertising platform revenue. This is Google right here. This is Facebook. These are trying to be ad platforms, right? So I think these have substantial upside as well. So Twitter, Amazon, Snap, Pinterest. I still have a hard time, because it's not B2B, besides Amazon, Twitter, Snapchat, Pinterest. Pinterest looks actually pretty promising. Okay, I was talking to Instagram people about this, and I honestly believe that Instagram is going to be the new Amazon shopping, mobile shopping.
But how does Pinterest generate revenue?
So I think this is the next part. Yeah, it's right here. So we'll talk about it. Emerging social platforms like Amazon, Twitter, Snapchat, Pinterest, etc. have higher growth momentum. Mark Zuckerberg spent his early days growing Facebook aggressively, basically accumulation phase. Now he appears to be in damage control phase where he needs to preserve the activity of the platform, right? Once you get so big, how do you keep people on your platform? It's like a video game. It actually really models from a video game. So you're asking me how does like Pinterest and all that make money? Let's see. Oh, I think it's a little bit more below. But to me, when I think about the way we're using devices today, right? Think about this for a second. You're going to see some charts later. It's going to show that Instagram users are just like growing like crazy, right? And if we're using mobile devices more than the desktop, and Amazon.com when we shop was on the desktop, right? Who has all the attention on the mobile device? Instagram. And what is Instagram rolling out right now in 2019? Commerce. So I honestly believe people are going to start shopping on Instagram. So that might be a huge business opportunity. I mean, we already know this, but it's going to get a lot more.
Well, there's your whole thing about data, right? So if you really understand data, you're going to present relevant content because people are flooded with crap, right?
Yeah,
so if
it
you
is.
open up your Facebook mobile and you see an ad for something that, because of the data patterns, are relevant to you, you're likely to buy it.
Yeah.
That's why the data is king.
Yeah, data is king, totally. And it's growing exponentially. Firehose, remember that. Facebook, targeting, audience customization, YouTube, machine learning, automatically time-edited clips, Pinterest, commerce, shoppable catalogs, Twitter, high relevance promoted tweets. Advertising strategies getting more sneaky, or basically evolving. Freemium model increasing in popularity. So this is just like a sort of a business model, but people like free. They want to try before they go in and subscribe. Our premium model accounts for 60% of gross added premium subscribers. So this is the CFO of Spotify making a comment. Developing a better user experience produces by far the most viral effect and impact when investing in growth. Engagement drives conversion from free consumption to paid consumption. Here's another comment from the Zoom CEO, or is it the CFO? CEO. Free to join when paid users host. So again, this part is just kind of acknowledging like the free model, right? It's just a nature of software that you guys might want to be aware about. We really want to get customers to test our product. It's really hard to get customers to try Zoom without a freemium product. We make our premium product work so well. If they like our product, very soon they are going to pay for subscription. All right, CEO of Zoom. Moving on to the next segment. So I guess I didn't answer your question on how does Pinterest makes money.
So they're also going towards commerce, shoppable tech.
Yeah, so they're basically categorized as communication platforms.
Yeah.
It's in here. We're just not there yet because it's going to talk about how the the way humans have evolved in communicating, right? Our most primal, primitive form of communication is actually images, and in words it's like a detour, it's said. So we'll get there. It's just not here yet. So we'll circle back to how Pinterest really makes money, and I honestly see the opportunity there because I'm seeing some success in Etsy, Etsy.com. You put stuff on there, it'll just sell, right? You arbitrage, you buy stuff from Alibaba, you put it on Etsy, it gets absorbed. Internet device usage. Okay, so this is the other thing, right? How much hours are adults spending? Daily hours spent with digital media per adult user. So mobile devices, it's increasing versus other connected devices. So this gray, other connected devices is this one, right? So like a Alexa Echo product, that's increasing right now. I think that one's going to ramp. It's going to ramp higher. Seeing that Amazon's like aggressively investing into Alexa and the voice economy.
What's the gray?
The gray is a desktop laptop, so that's not changing much. So the conclusion from this is hours on mobile devices and other IoT devices are increasing. Right, so people are spending more time on the mobile devices. This is where the marketing dollars should be deployed if you are a business operator. Global USA listed technology IPO issuance. So this one's talking about, so you got the NASDAQ chart right here in the red. It's talking about the technology IPOs, right? You see it, well, it's not really a decrease. This is just 2019 year to date, but it's just going parabolic. And then the technology private financing. So venture capital is increasing funds coming into here. So more people want to get into venture capital, basically. Device time. Mobile is now greater than the TV. Right? So they talk in the report. They talk about how people, while they're watching sports on TV, they're using their mobile devices as a secondary media tool. I don't know what you're trying to do, but
Talking about location, right?
Huh?
You see a player, you see, okay, what do I want to do? Whatever.
yeah. So it's it's like how you could be in this investment club and be online playing Warcraft right now, like John right here. I'm just kidding. It's okay. It's the new norm. So television, guys, this is a transition right here. Late 2019, late 2018, early 2019, the year and the start to mobile devices dominating the television. This is saying this just started, right? TV versus mobile devices. Roku versus investing into mobile iron. That's not a good example though. Percentage of internet users using select platforms. Greater than 1x per day global. So this is what we're seeing. YouTube, Instagram experiencing the highest momentum in terms of usage. Check this out. So if people are using it more, again, if you're a business operator or if you want to invest in a business, make sure that business is focusing on these platforms to kind of optimize the marketing dollars. At least I would say. But then there are other platforms right here, but not growing as much as YouTube and Instagram. So the question to ask yourself is like, are you increasingly seeing your family, friends, peers on YouTube, on Instagram? I see it.
What is happening to WeChat?
WeChat, where is it?
The purple.
Yeah, what about it?
I wonder where that traffic's going if WeChat is descending.
I don't know.
It's because of the privacy concern probably.
Yeah. Hey, I'm on WeChat too. It's funny because I post up on WeChat and you never know. It's like people reach out to you. Hey, I want to go to your mixer.
What's interesting is Facebook slightly going down and Twitter's going up. That's something.
Twitter's peaking up.
Because of Trump.
Yeah. So Facebook has primarily been built off the desktop platform. Would you guys agree? If you guys watched the movie The Social Network, right? But Instagram, they had to buy Instagram. They kind of knew where things are going. So now they're buying into VR. That's something we got to pay attention to as well. Let's see. Video watching daily minutes. So these are the minutes spent right here. Television is the blue, and then digital video is increasing. So digital video is ramping, while the blue television is going sideways. Less and less people are using the TV, right, and more on mobile devices. Again, just kind of reconfirming everything that we know already. Now, this is actually the other interesting part right here, the voice economy. So voice is equal to 70 million podcast listener monthly active users, plus 2x in 4 years. So I drew a line right here just to kind of show that it went 2x. It just went parabolic right there. And you know who really capitalized on this? Jeff Bezos selling Amazon Echo products. So we'll look at it. So this is, you don't have to pay attention to this. These are just the most downloaded podcasts, but this is the users on there, right? So if there's users, that's where their business is going to be good. also where investment will be good as well. So Amazon, the voice podcast model is exploding. We know that. Everyone's listening to podcasts now. I should be having a podcast. I don't have one. Amazon Echo install base. Check this out. Right? They're building out the voice infrastructure. They're gaming the infrastructure. This guy constantly bets his money in a way where he's just going to keep making his stock go up. No, I haven't heard of a money manager who was talking about shorting Amazon.
How do you compare Amazon to Wayfair?
To who?
Wayfair, W.
That's just furniture.
I don't know what Wayfair is.
Wayfair retail.
Wayfair is retail furniture supplier, like Etsy, but
Is it?
yeah.
Yeah, I haven't checked that one. I don't use that.
No.
Wayfair.
Yeah. And Amazon purely capitalizing on the voice economy opportunity with Echo devices. So Echo skills, right? So this is the install base. So this is the hardware. And then now you're developing skills. So you're doing open economy. That's why I say if you have kids today, I would train them to develop something on the voice platform because it's just money. Money because if you go up to the voice economy, the growth rate is just so high. When things are just growing so much, you're gonna capture business like hand over fist. How do they do it? Like, yeah, you're just gonna capture business, and Amazon's doing it at more commercialized macro level. He's capturing like all of it. Because I don't think, I mean, Google's in the game. I know that, but yeah, be very aware of the voice economy. I think that's how I'm using my Amazon Alexa every day. Alexa, turn on the lights. Alexa, ask Dyson to turn on.
It's interesting how Siri was so fashionable 5 to 10 years ago. It was like the coolest thing.
Yeah.
Right now, it's kind of not really all that relevant as much.
I've been
Whereas
pretty
the
annoyed with
Amazon
Siri
thing,
as of
it's
late.
kind of fascinating how fast that changes.
Yeah. So there's significant development that needs to be done here. I don't know if you guys notice this, but like after teaching for a while, the development stuff is like the same thing over and over. Here, I'll give you an example. Buy land, develop the home, sell the home, right? Let's see. Commercial real estate, same thing, but just bigger stuff. Businesses, I don't know, cafe, buy the equipment and the raw material, transform, develop, sell, right? Software, get, have an idea of a system, hire a bunch of developers, develop, sell, right? The voice thing, lay out the infrastructure, develop the infrastructure, sell. It's the same thing over and over. I don't know if you guys see that. But I find that super duper interesting. So that's the voice economy, guys. Going over to the next one is the wearables. Wearables are increasing, right? I see you got the Apple Watch. I'm a little outdated compared to you. I think that one's going to keep going because if you go down, it talks about. Oh, I'm not there yet. Okay, never mind. So, Apple. Later down, it's going to talk about how Apple made a quote saying, like, we're going to be the healthcare company. We're going to change the world by helping people stay healthier, live longer. But keep in mind, wearables are increasing. So now, going back to your question, to answering the Pinterest part. So this part is image usage equals increasing. So with technology, our form of communication is evolving. Is what I wrote. Usage equals images, increasingly relevant way to communicate. So going back, oldest form of transportable communication, right? So 40,000 years ago on the far left, you see, you have the oldest known image, painting in Indonesia. And then in the middle, you got 5,000 years ago, oldest known text, right? And then 131 years ago, oldest known movie image, right? And so for centuries, people have learned to write and share words, offline, one-to-one, or one-to-some. This is one-to-some, right? For centuries. Right, for centuries, but moving forward to today, or we'll continue, right? For centuries, make ideas transportable. So Martin Luther King's thesis, simplifying concepts, and enable learning. So, but for 2 decades only, right? For centuries, we use those. For 2 decades only, people ramping image plus video creation / sharing online and often one-to-many. For decades! Exclamation point! Question mark! Evolution of our communication. Did you see it? I didn't see it until probably a year or 2 ago. I feel like I wish I saw it sooner, but our form of communication actually evolved. But then we're so submerged in social media, we didn't see it. Isn't that?
Our evolution started with our ability to see.
Our what? Our
evolution.
Yeah.
Started about 532 million years ago.
Yeah.
When the first organism had the capability to see.
Yeah. man. That's cool. So this is going to answer the how does Pinterest makes money, right? So for decades, it's only been decades. For centuries, we've been using this is old form of communication, apparently. For only decades, this is where we are. So what does that mean? Foundation continues to ramp. Smartphone/camera devices, you see right here, active smartphones, increasing but kind of going sideways right here. Smartphone power is also increasing, right? Power and storage increasing substantially. So this one was a camera, active smartphone. Okay, and then over here, cellular data traffic is also increasing. So telecom towers, there's a REIT that focus on communication towers. It's just outperforming. It's like the best one. AMT is it? American Towers, I forget what it was, but we looked at it a while back. That one is just paying dividends and going higher and higher. And then Wi-Fi reach, networks. Networks continue to be a hot segment. So if you really want to invest in infrastructure software, then you know it's going to be storage, data centers, or networks and computing. Image sharing equals foundations continue to ramp. So image creation, we're creating more images than ever, right? Annual new photos taken globally. Right, Instagram monthly active users. So when I started to combine all that, people are gonna, this is a really parabolic and very vertical line. I honestly think we're gonna start shopping on Instagram versus Amazon, and I think that's what keeps Jeff Bezos up at night. Yeah, really. Image creation plus sharing, engagement continues to ramp. So in 2006, we're gonna answer your question. Text only in 2006 for Twitter. In 2019, text, images, and video. Greater than 50% of the tweets impressions. Right? Image creation plus sharing, platform functionality and usage continues to ramp. So this is where I started to realize, holy, this Instagram is going to become like a serious device. So we confirmed that people are going to be more mobile devices. So in 2011. They were just image editing and sharing, right? The most basic, primitive form of human communication. And then number 2, 2015, data-driven discovery, right? So I'm guessing maybe the hashtag kicked in or whatever, right? And then moving on to 2016, this thing's evolving. I don't know if you noticed, the software is evolving, right? Because we keep developing it. 2016, image plus video stories. I saw that coming, right? But what I didn't realize now, number 4, phase 4, whatever, 2019, just started 2019, commerce.
So most of our internet searches used to be text-based. Now it is moving from text to audio, just like you talked about earlier.
It's visual.
Audio to audio
Oh,
tagging.
right.
What's coming up next is image to image tagging.
Yeah.
As you get image recognition, it gets better and better. Then
Yeah.
you can take a look at a picture, and that picture will tag another picture.
Yeah, it's incredible. So what keeps Jeff Bezos up at night? I think this really does right here. Instagram is evolving into e-commerce and is a powerhouse network, right? Why did I say powerhouse network? Well, how many billions of people are in the world, and how many users does Instagram have? Image sharing, so monthly active users, 1 billion. A billion people creating new images and sharing it all day long online. I try not to get sold, I remember the first time I went on Instagram and it's just whoa, all these people are sharing pictures, and now I'm getting a little immune, or pretty immune, so I feel it doesn't work on me anymore. I get it, you're trying to sell me, you're trying to post these pictures, but it's not gonna work. So that's Instagram, right? Investment thesis, people will shop more on Instagram than Amazon from a mobile perspective. It's my thesis, or conclusion from that. Now here's Pinterest right here. So this is why I got pretty bullish on Pinterest. If they really have a strong mobile, I don't use Pinterest. Does anyone in here use Pinterest, the mobile version? Oh wow, you use Pinterest? Oh, you do too? Okay, so there's a stat. I read the S1 prospectus, and it said 70% of people on Pinterest are women. So you, is that true?
Images for presentations. Make a presentation.
And they have really creative ideas. If you're looking for ideas, I think Pinterest is a great place to go.
Okay, I'll check it out. I never used Pinterest. But look, number 1, image sharing. Number 2, video organization sharing. 3, image-powered search. And then 4, image-driven discovery commerce. So this is a publicly traded company. I didn't really appreciate the upside potential on this, but now it makes me want to take a second look. So that's a new stock idea, maybe.
I think it was a bust, right? When it was in the
That's typical for IPOs. So let's see, is it pins for the ticker?
Yeah.
So let's look at pins. Yeah, so this is typical, right? You'll get the pop and then the decline, but we need to see if valuation makes sense. So this is a zombie company, nothing on the price to book. So yeah, this is straight zombie. If it's a zombie, then I look at the data, how many users, and are users growing exponentially? Because at that point, that's the money. The way I analyze it now. People have always been visual. Our brains are wired for images. Writing was a hack, a detour. Pictorial languages are how we all started to communicate. We are coming in full circle, guys. Right? We are reverting to what is most natural. Instagram has always been a communications platform, not an image sharing tool. Instagram challenges the notion that beauty comes in a traditional artsy form. It's not about beauty, it's about the story you tell. Right? Instagram's inherent feedback systems help users continuously improve communication skills. And that's from the co-founder of Instagram. Right? So you want to see a picture or 1,000 words? I thought that was pretty good. So it is 12 o'clock, guys. If you guys are hot, thirsty, or feel free to walk around. And I still have 20 more slides. Yeah, so I'm gonna breeze through it. Okay? Is this interesting so far, though? Okay, you guys doing okay? Freemium businesses. So this is moving on to the next part where it talks about really understanding the freemium business model. Free users experience enables 1, more usage, 2, more engagement, 3, social sharing, and 4, networks. This investment club is basically free, so you guys are more likely to engage, right? I think if I charge money, people will feel guilty and they would have to come, but I don't think I want to do that. So I like the engagement, so I want to keep it that way.
3 months try.
Huh?
A 3 month try.
3 month try. Yeah. Premium user experience. Now that's on the freemium side, right? If you look at the bottom, it's the premium user experience drives. Now, if you make it premium, meaning if you charge, then it'll drive monetization and to product innovation. So that was, if you watch the social network Facebook, he started off just aggressively obsessed with building the people on the network, and then the monetization came.
Yeah, they say if you're using them for free, you're the product.
If you are using, yeah, and there's no such thing as a free lunch in economics.
That's right.
Yeah. So I didn't realize that when I started this investment club. When I started this investment club, it was purely off the intention of like, I want to become a really great investor. I want to talk about this, more because my family didn't want to talk about finance. And then next thing you know, I realized the dynamic of standing in front of a crowd. This is just like through hundreds of years or whatever, right? It's basically selling. I didn't know I was selling until I started to see like the crowd, and there's like consumer services that could be done. So like real estate services, insurance services. It didn't come to me in the beginning. I didn't see it. So come on my side once in a while, you learn a whole new world, right? I call it consumer and then producer. Because someone has to produce for you to consume. And then you get super philosophical when you start, I was watching Netflix on the study of like dark holes and all that. And you think about the sun, like someone has to produce the sun for you to consume the energy of the sun. Sorry, that's getting too deep into physics and stuff. It was really interesting. Like there's different sizes of black holes. Yeah. So anyways, freemium business evolution, okay? It actually started with gaming evolving, what did I put here? Started in gaming, evolving / emerging in enterprise and consumer. So this is the model I noticed. Like a lot of the software that we see today, and whenever I use a software, whether it be like Microsoft Outlook or whatever, I start to think about, this really reflects a game. LinkedIn's a game. I view LinkedIn as a video game. And your score is basically, part of it is like how many engagement, likes, and followers you get. It's purely a game. They gamified it. And we're starting to see that introduced into not just consumer gaming, but also into enterprises and consumer in general, consumer shopping. Right? So this is an interesting development. All in, just getting started. So let's see, freemium business model. Originating from games and now bleeding into enterprises. So here are the examples right here. So gaming, you have like Zynga, I don't know the brands well, but Nexon, but they're growing pretty fast. So if you go to the paid users, right, and if you go to enterprise, this is the part where I do know. Dropbox, Slack, Wix, SurveyMonkey, all have a freemium business model, and then later monetization strategy, right? And then consumer, Amazon Prime. I was using Amazon for the longest time, and then when they introduced Prime, I willingly said, yes, man, take my money.
Absolutely.
Yeah, it's just the service was just too good, right? And then Twitch, Chegg is pretty popular apparently. I didn't realize the business model for Chegg. Chegg is like news books, right? If I recall correctly. You guys know, if anyone knows better than me. But this one seems like a really good business model because of the whole student debt issue, right? Student debt's increasing, and so this is kind of helping students offload that expense. This is a solid business model in that sense, if you think about it.
And the politics, though, education could be free in the next election.
That's the Uber risk, right? And then the Cash App I never used. So the proof of concept. So this is gamification
What's
of.
Cash App?
I don't know. I never used that one, but it's a consumer app. It's probably like a Zelle or like a Venmo. Yeah. Looking over the
I think
proof.
that's a generic name.
Yeah. Oh yeah. You're right. Proof of concept, right? So does this model work? Well, we do have publicly traded companies that are purely play freemium businesses out there. So for gaming, we have Epic Games. For enterprise, we have Dropbox, and they're making. And these are their subscribers right here. So Spotify has 100 million subscribers. So I was for the longest time I was a bear on Spotify, because I just didn't see the valuation, the balance sheet, and the way they IPO'd. It wasn't a standard, investment bank IPO. And then I realized like they're going for the data and the users. That's where the money's at now. So I'm evolving my thinking. Okay, I'm getting better at the whole software investing. It's when you see a zombie balance sheet, we have to ask, what does the data look like?
Why didn't you like the way they enlisted? They did a direct.
Because so let's say it was in a private market, right? And the valuations are stretched. And if you do like a general announcement, big investment bank IPO, those guys would be like, no, this is like a short, and they'll sell off. So I think they want to slowly distribute at that value to slowly liquidate higher. That would be my incentive if I was on that side, right? So as an investor on the other side, I wouldn't want to participate. So I let it decay. This premium, I think. So I say pay attention to the data, right? But I think in a great financial crisis, if we have one again, I think it'll pull down the premiums. Yeah, because these are zombie companies. They don't make money. So in a hot environment, well, it makes sense. But in a not so hot environment, it doesn't make sense. So these are examples that are greater than 1 billion in revenue. Dropbox and Spotify, Pandora, and Match Group. For the longest time, SK, I think he's online. He's a super bull on Match Group, and I do see some solid money managers who are super high conviction on that investment. Freemium enabler. So now that we talk about these applications, right? What is the infrastructure behind it? So this is where the part where I specialize in, cloud infrastructure. Freemium business model enabler equals cloud deployment, and this is where it talks about Amazon, Google, and Microsoft. So here's the chart: cloud service revenue for Amazon, Microsoft, and Google. Is it funny that Google kind of just got into this game with Google Cloud, right? Why would you just suddenly get into a game? They're relatively new here, right? Q1 2017. They decided, hey, we got to jump into this cloud infrastructure game. Because only 20%, if I have the number right here, only 22% of cloud is deployed. And now, I think there are people in here who could speak better to me on that, since you're actually in that environment, but we're seeing 22%. This is like a Gartner quote, if I recall. I remember seeing this number before, where it's like only 20% is actually online. So that means SAP, Oracle, ServiceNow, Workday have substantial upside, right? And we could confirm that looking at the Battery Ventures report.
Yeah, that's why I think SAP S/4HANA.
Yeah.
I think it's going to be on cloud now, and that's the next SAP's biggest thing.
Wow.
And I think that is everyone has to be there on that platform by 2025.
Yeah. See, I'm trying to make more friends in the data and software space because I like investments. Let's see, Amazon is, guys, these are the numbers right here. Amazon AWS is the blue, Microsoft Azure, and then Google Cloud right there. Google Cloud just started that initiative. Let's see what else. Cloud is just getting started. Cloud deployment. So this is a CIO survey. So infrastructure as a service and platform as a service, they see it increasing per Morgan Stanley research. Right? Interest continues to rise. So that means, what does this mean from a business perspective? If their interest continues to rise, then they will continue to spend money for those services, right? Basically give money to like ServiceNow. So those still have upside. EnterpriseGuy is going places, hopefully.
Yes.
Digital payments continue to rise. So this is another angle, right? We looked at the enterprise cloud infrastructure. Now we're looking at digital payments. Digital payments is greater than 50% of day-to-day transaction. 59% of transactions are digitized versus 41% in store. Right? This explains why when sometimes I go to cafes, it's pretty empty. Sometimes. Data explosion, winning businesses. So what are the characteristics of today's winning businesses versus back then, right? So pre-1995, winning businesses were focused on using human data and insights to improve customer experiences. Post-1995, the winning businesses were, again, using data and insights to improve customer experiences. That's the same. So human data now is, after 95 is digital data, right? And then 2000s is winning businesses means build/use data plumbing tools. Did you guys see the difference there? So pre-95 it's human data, and then after 95 it's digital data, and then after 2000s it's data plumbing tools, right? To use data insights to improve customer experiences. So what is data plumbing tools? Collect data, understand customer wants, and improve business processes, increase customer input, improve products, manage direct customer subscriber relationships, improve consumer decision making. 2, manage connections. I won't read that. 3, optimize data. Right? Now, I know this might be boring or heavy for some people, but these are the new and hot businesses that are evolving, and I think it helps to understand, right? I'm a finance guy, but I'm putting in the effort to understand the technological data perspective of the business because it's just me evolving my investment game. At least I feel that way strongly. Data is now the fundamental to how people work, and the most successful companies have intelligently integrated it into everyone's daily workflow. Data is the new application. CEO and President of Looker. Any comments on that one? Data volume and utilization. So data volume equals extraordinary growth, right? So this is where we are today, 13% structured data, 9%, 10%, 13%, 16%, and 32%. So just again, showing you the explosion of data. And that's why I thought, Cloudera would do good, but they got into trouble. So MongoDB is doing good though. That one's nice. Data propagation equals expanding. So these are just like sources of data, right? So large data centers, including public and private cloud, edge, branch offices, gateways, cell towers, and then endpoint, vehicles, people, mobile, computers, assets, API. This one really expanded my mind in terms of like, where else could we get niche groups of data sets? Is that a fair statement from a data person? It just really helps you understand a lot more. Let's see what else.
I think one thing which we need to look at is as the data is growing, I think we also need computational power. And that's why companies like SAP and Oracle, they're coming up with this in-memory databases, where you can actually now compute the data in real time and present actually insights.
Yeah, the relationship between hardware and software have to stay very close.
Yes.
Right? So if the software gets too advanced, you data guys have work to do. You hardware guys have work to do. Right? Data stewardship equals evolving. Enterprise surpass consumer. Data stored by manager. So enterprise surpass consumer. So now this is interesting to me because it's talking about how businesses are generating more data, but cloud seems to be. I didn't quite understand the cloud. Cloud overtaking both. Now I don't know if anyone in here could kind of help me with this slide, but I understand that enterprise data is surpassing consumer data, but cloud data is surpassing enterprise data. Can anyone explain the cloud data part? I'm guessing like.
So you have enterprise data. Some of it is
Some of it is
in their own
in-house.
In-house, and then.
Consumer data is also on the cloud.
Right.
So both of them are on.
Okay.
So you could see. I think again. I
Right.
don't know.
Right.
I'm speculating.
It's okay, man. We're all learning in here.
I'm speculating that as concerns about data integrity goes down,
Right.
then you would have more enterprise data going on cloud. Number one. Number two, latency, right? So if I have data on the cloud, if I have to do intensive computing, for me to send instructions from my desktop or mobile to the cloud,
Yeah.
to do the computing and come back,
Right.
takes time.
Right. Okay.
So if that speed increases,
You gotta draw out this for me one of these days.
No, like computational power goes up. So if you compute in the cloud, it's faster than you compute
No, but-
locally.
Oh, I see what you mean. I see what you mean. Oh, yeah.
but then the latency there, right? between the time you want it and the time it
That
goes and comes
latency
back.
will drop.
Once
So
you have
that
5G.
latency will drop, the computational speed is more important.
This is the conversation of hot investments these days. So, thanks.
So I think one thing we also need to look at is the privacy. I think now companies are more
Security.
open to
Yeah,
actually
so
put their
they-
data onto the cloud.
I'll send you the report. They talked about that here. I didn't include the privacy part. Right, it's just too much to kind of go over. Hey, thanks for sticking around with me, guys. It's 12:20, so 2 hours 20 minutes, but we're almost there. 10 more slides. The data-driven world will always be on, always tracking, always monitoring, always listening, and always watching, because it will always be learning. What we perceive to be randomness will be bounded into patterns of normality by sophisticated artificial intelligence algorithms that will deliver the future in new and personalized ways. AI will drive even more automation into businesses and feed processes and engagements that will deliver new levels of efficiencies and product that are tailored to business outcomes and individual customer preferences. Today, companies are leveraging data to improve customer experiences, open new markets, make employees and process more productive, and create new sources of competitive edge. Traditional paradigms will be redefined. Those are big words. Like vehicle or white goods ownership. So that's basically what you were discussing earlier with the gentleman over here. Where was I? And ethical, moral, and societal norms will be changed. It's crazy. It's so interesting to think about. Data volume plus utilization. So we looked at this earlier already. So technology is advancing more than the human adaptability. And this is the water hose picture right here. Consumers, businesses, regulators are increasingly drinking data from fire hose. On-demand economy. So this is actually a pretty interesting concept, but on-demand economy is like, hey, it's basically economy or businesses or apps out there that are servicing you when you want it. So like Uber, Airbnb, DoorDash, right? You want to travel? On demand. You want to eat? On demand. You want to date? Pretty much on demand, right? 5% of USA restaurants, so this is a quote from the CEO of DoorDash. I won't read it all. We're still in the very early innings of the development of the on-demand economy, right? So there's going to be a lot more Uber models coming out there. I don't know who's going to develop it next, but if I was a VC, I'd be hunting those entrepreneurs who are going to make it, right? I'm more of the investor. I'm not so much the operator. But I could verify market opportunity and then invest. We started DoorDash to help local businesses. Local has been the promise of e-commerce, but local has long been the promise of e-commerce, but no one has found a way to help local merchants thrive online. That is the space we focus on. It seems like the patterns that develop on top of existing infrastructure. So now this is telling me that small businesses, at least restaurants, are the infrastructure that DoorDash is building on top of. Crazy, right? Man, I mean, in the pure software world, you see, infrastructure software on top of infrastructure software on top of end user software. This is like physical stuff. We do this by enabling local merchants to participate in selling convenience. Right? There are a lot of merchants who are ready to make the transition from selling experiences to also selling convenience, which can often reduce their costs. And I think this is the biggest business model change in commerce. So just another angle to look at.
Just another angle, by the way, in North America. So this may sound really strange, but this is where it's showing that the wealth is getting wealthier, and the peasants are fighting to survive. Let me explain.
Is that the world?
People, the millionaires who can afford to use Uber and Lyft and so on and invest in it are being supported by people who can barely make a living driving for Uber and Lyft. Same thing with DoorDash. The people that are willing to pay $10 to have a $10 hamburger, $15 hamburger delivered to them are being served by people who are barely making it, delivering that to their house. So, I mean, you're seeing a divergence here that wealthier people, like that curve, like Trump will be saying that, look at your 401k, lots of millionaires and billionaires making tons of money, and people barely making it in the Bay Area, delivering food and hopefully making minimum wage.
So I know
it's quite a remarkable shift of how that seems to be separating more and more.
So that's one of Robert F. Smith's fear, is that technology will further exponentially increase the wealth gap.
Absolutely.
It's like
the
way we see Uber and Lyft valuations, it's like, if you think about Uber, it has Saudi money in it. Saudi Arabia is investing in Uber, right? They invest in SoftBank, who is co-investing with Apple into Uber and all that. So there's sovereign money involved in that. and I'm starting to see like, you know, I think I went up Highway 101. I saw data sovereignty on a billboard.
Huh.
Right? Crazy, right? So, yeah, times are changing quick, and I think if that happens, you know, I think the wealthy of the future are going to talk about, I got this much data, man. Yeah. Yeah, I don't know, man. It's just I don't know how that'll play out. I'm just trying to invest, right? I don't want to go up to that war level.
I was talking to a professor at USC, he's now going to Harvard. He does this AI for social stuff, and he was saying,
Hey, thank you.
we were talking about how if this happens because of AI, if you have this disparity growing, there are two things that can happen. One is there's going to be a revolution, like you said, or the government will be more so-called authoritarian. So China is authoritarian.
They're smart, man.
China is authoritarian. That they will probably be all right.
Yeah.
But what will happen here and democracies is something that we need to worry about. So will we be more egalitarian?
I mean, I'm
or
sorry.
will we
Go ahead.
become authoritarian? I don't know.
I mean, I'm starting to see the power of some of these influencers that they wield. They're young, and they have 1 million people following them on YouTube, right? And I got a taste of it on my LinkedIn. Like, wow, I could reach this many VCs from just, you know, sharing stuff. The survival part is a scary topic, most provocative. I think the second most provocative characteristic about that is time. I think all this technology unlocks way more, like so much time. Like my standard of living, like I have on-demand consumer needs at this point. If I need anything, it's a touch of a screen, right? So that gives me a lot more time than what the older generations, like the baby boomers, didn't have, where they were still living in processes, right? Grocery store, right? I mean, we're gonna have deliveries soon, pretty much. Subscribe, grocery, whatever. But you have to go and get gas. I mean, I use an app to get my gas filled, right? They'll come to my
Really?
yeah
You do that?
booster.
So that you don't you don't drive your car.
Man, I'm so
gas station?
cautious about my time that I don't want to go to
That's
the gas
remarkable.
station. Yeah.
That's great.
Yeah.
So
So
what
but
premium do you pay for that?
like $2 extra.
Per gallon?
No. I mean, you pay the same. I don't know the price. Do you use Booster as well? I don't. Yeah, it's not. I mean, it's not like.
It's at work actually, so they come to work.
Yeah.
What can they do?
That's remarkable. So instead of spending $50, you spend $52. Like the price.
Yeah.
The
I mean,
basic
I save
price
time.
is-
Dude,
That's incredible. Wow.
So I mean, think about it. Like, I have a lot more time in this. Like, if you were throwing me back in like, I don't know, 80s, then I'd be doing a lot of processes. My day to day would be like, hey, how's it going? And people at the cafes all full, and you know, grocery stores would be full, malls would be full. But today I live in a world where I go to the mall and the malls are empty. I mean, not the popular ones aren't empty, right? But a good majority, if you go out into like other malls, like up in like Daly City, South San Francisco, they're all empty. I mean, they're relatively okay. They're popular on some days, but that was the lifestyle back then where everyone went to the mall and hung out, and that was where the salespeople would like do all the business and stuff. But now it's all online, and so everything I need, everything I want to consume and learn is just like
Absolutely.
like right there. I have access to a money manager if I could email, right?
Yeah.
Venture capitalist, right? Sovereign, what's it? The CEO who manages the private family money of Abu Dhabi. So it's like you get what you want, and now I have to face this big decision I feel at a young age where it's like, what do you want to do with your life? So I want to teach. I want to be a great investor. Right? It's not even like you grew. I guess I grew past the money chase. It's not even about the money anymore. It's just like I have so much time now. It's like, what do I do with this time?
That's great.
So give time back. I don't know. Help people accelerate their time and then get to my level and be like, hey, what should we do with our time? We got extra time now, right? Because that's the thing about an instructor or a lecturer, right? They help you accelerate your learning curve. What you learn in here probably would take you, if on your own, maybe 5 years like it did for me. But if you learn, it will take you like 1 year, and then you start building on top of the infrastructure I built in your, in your knowledge base, let's say.
Yeah.
So, yeah, I mean, I constantly observe the world. I think that's the nature of an economic background person. It's fun. I get a kick out of it, and I just want to focus on the positivity part of it, right? And I think eventually the money will come. Yeah. So that's the ultimate game plan. Be the not the Warren Buffett, but the technology Warren Buffett, whatever.
I don't remember who said it, but someone said time is the ultimate form of wealth.
Yeah.
Because you can't buy it, but if you relate to yourself, you have time, whereas other people have 3 jobs who don't have time.
Yeah.
Right?
Yeah.
And so if you have time to do what you want, that's the most ultimate luxury in life.
You know,
that is the only dream to have.
So people think I work a lot. But there are days where I sit there, I'm like, oh, what should I do? Should I read this book? Literally, I'm not even joking.
That's great.
Like, I've optimized my lifestyle in a sense where I don't do the things that I know a robot could do. I try to do things that are more human, that requires discretionary judgment, right? And so, yeah, man, it's just I still feel like I have a lot of time.
That's cool.
Yeah. Anyways, let's get this done and enjoy our Sunday. You know, nice weather outside, hopefully. So this is DoorDash right here. Online, let's see, on-demand product services, consumer spend. Online marketplaces seems to be the most popular. All right, we'll skip a little. On-demand platform workers. So there's more people now. This is the side that Hey, thanks guys. So people using Uber and Lyft, right? But people have to be on the other side and provide that service. So workers are also growing in the on-demand platform. This is creating like a whole new series of jobs. You want to work when you want to work, just as when you want to consume, right? On-demand work motivation. The main motivation from a survey appears to be previously unemployed. So that's the main motivation typically. Number 2 is learn new skills. Number 3 is previously underemployed, so not paid enough. So this is like my side hustle. Hey, you're welcome. So motivation behind, okay, yeah, you already saw that. On-demand platforms, big numbers, high growth. So Uber. So on the left side is real-time platforms. Uber at 4 million drivers/partners, and then below is DoorDash. Look at this DoorDash chart. It just went parabolic. That's crazy. And then internet-enabled marketplaces. Etsy, Airbnb, VIPKid, and Wanolo. I never heard of that, but it's just exploding. These are opportunities today, not just for investors, also for business owners, anyone. I guess even politicians, if you think about it. If everyone's focusing there, then we need to regulate that. It's just the role of the regulator. Online education, undergraduate tuition fees. You see the blue line? It's increasing like crazy. Student loan debt increasing like crazy. So this actually, went into details of talking about Coursera, right? Degree programs at top institutions are moving online via Coursera. So in 2019, we have more institutions offering online courses. It's just like this way too priced for that traditional degree, man. Give us the online, cheaper alternative. Online education marketplaces, Coursera, learners are increasing like crazy. I feel like I should be uploading my courses on there or something. Might be a cool opportunity. Udemy, another one, continuing education, global. Say again? Oh, no worries. Education marketplaces, instructors plus students, again, growing. YouTube, what's this one? YouTube, annual hours spent. So the hours are going up. Wait, what's this? I don't recall. I'm going to skip this one. Coursera. Popular topics on Coursera, data science. So I've been with this extra time that I was talking about, I was thinking of taking up a data science class just for fun, as a hobby. Yeah, I think it'd be pretty interesting to see where it takes me.
It would be amazing. I think you would love it.
Yeah, I think so too, and especially like if it's basically the way I perceive it. If you learn data science, it's enabling me to participate in the space. So my investment game would be better in that space, as well as maybe develop like a startup with the business skill that I have. So let's see. Now we're also seeing Coursera partner with B2B enterprises, right? So employers are like, hey, don't go to school; it's too expensive. Go to Coursera. So they're partnering up. That's a good thing. Now, I think we're about to end here soon. So immigration equals results in technology leaders. So this is an interesting chart. I won't go into details, but just goes to show that all the top market cap companies out there come from people who are immigrants, basically. Right? So Jeff Bezos, Cuba. Steve Jobs, Syria. Sergey, Russia, and so forth. Pretty interesting stuff, all the way down. Right? These guys are the hustlers. And then here's another one. I won't look at that. USA population versus foreign-born. So the foreign-born is the blue part. Pretty small, but it's increasing. Right? There's momentum. Foreign percentage total. It's increasing. So more foreign people are coming here. Then I think I'm going to close it soon around here. USA tax dollars. Where your tax dollars are going. So I thought this was really interesting. Towards the end, they dive into the global macro a little bit. USA income statement, right? So we're paying taxes. Did you know that over the last 30 years, they average a net negative loss of 18%? tax, so they borrowed basically. They borrowed more and then the expenses, right? So what were the expenses basically? So the green is the revenue, right? They make most of their money, 51 and 35%, from individual income taxes and then social insurance taxes, right? That's the bulk of their money. The other one's 6%, 8%. And then yeah.
I mean,
See, that's what I'm saying. Start a business, guys.
yeah,
Yeah, start a business, right? Operate as a business. Dude, okay, there's this CPA that gave me his business card, right? And he's really sharp too. He gave me, and I'm like looking at the back. It's like 6 steps to turn your home into a corporation. And it was like 1, 2, 3, 4, 5, 6, saying like, okay, first you create LLC, then I don't know how you do it, but you turn your home into a business, and then you rent your home out to yourself, and you save a lot of money on taxes. I didn't know.
That's crazy.
That's right.
Have you done that?
No, but that's the principle behind it.
Yeah. I'm just like, wow, like
Why wouldn't everyone do this then?
because not everyone knows that.
Yeah, not everyone knows.
That's why he's marketing on his business card, and I was like, wow, like this is good stuff. I like that. So the biggest expenses for the government, right? Risen owing to rising healthcare costs, aging population, right? So entitlement mandatory, Social Security, that's the biggest expense it seems. And then
You wanna make healthcare free, so.
yeah, 16% non-defense discretionary, so other expenses. The other one is defense, 15%. So yeah, those entitlement money. That's where it's hurting us the most. So this is the annual so we saw this before. This is from the CBO, right? The Congressional Budget Office, saying that they're going to need more money, right? And when they need more money, it's going to put more pressure on the economy. They're going to write more. This is basically saying they need more money, and they can't get positive money. They're going to get negative money, more treasuries, lower interest rates, issue more bonds. Gold's going to go up. In that case. So I had to squeeze that last one.
The budget comes out in like September, right? The debt ceiling.
I mean, well, it's a longer term play. All right, it's all educational purposes only. If I were to give you a serious answer, you got to be. The chart says that it wants to go up in the near term, but again, you can't predict the markets with 100% accuracy.
It looks like in the past, government debt decreased when the economy was good, and now it's actually been doing really good, but debt's increasing also.
Yeah.
Also tells us that Bill Clinton was one of the most
Yeah.
effective presidents in history.
Oh, yeah. So.
Well, maybe it's just the environment.
No,
You
no,
know,
the green one is good.
But how do you
Just in
know
general.
it's just that environment?
Yeah.
I mean, it was the internet boom era.
He increased that, he increased taxes on people, and now nobody's betting them.
Oh, maybe, yeah.
Yeah. So this is again, guys. This is the income statement, right? We look at this a lot, and so if it's negative, it kicks back into the balance sheet, and our balance sheet gets more negative with debt.
So Obama also decreased it.
You're talking about what? Which year? This one?
Yeah,
This way?
that's the Obama year.
I guess I don't know. Yeah. So that's our income statement as a country. Let's see, entitlements, USA entitlements. So a little bit more into details. Medicare, Medicaid, driving most spending growth, right? So in 1988, 34% of expenses. Now it's 54%. Right. So entitlements are increasing. Expense by category. So what I mark on this one? The most interesting part for me was the entitlement. It went from 42% to 61%. Right. Everything else is like defense, non-defense, net interest cost, 10-year yield. Oh, this was really interesting to me. Because, so when the yield goes down, right, they're lowering interest rates. So as their expenses go up, they mechanically, manipulate it to engineer more money for themselves. Very, very interesting stuff. And then this one is, let's see, USA entitlement growth over 30 years, looking at numbers closer to home. So in 2017 versus in 1987, right, you have median household income, 17K, average entitlement payout,
So 61K is the income.
oh, I'm sorry, yeah, 61K, I was like thinking 17K was too low. 17K average entitlement payout per household from federal government, which is 28% versus before it's 15% of your income. So our obligation is a lot higher today from a tax perspective.
So the household income has gone down drastically, that's the whole point.
Yeah. Now, that's if you're on the employee side. If you jump to the business side,
That's different.
it's different. You got better tax brackets, that's why we all should start a business. And you're exposed to inflation. So they print money, your business makes more money.
So here what it says is people have gotten, no, they've gotten, that's fine.
Workers got more broke.
That is why my job is called as just over broke.
Just over broke. Guys, I think I'm gonna call it right here.
Yes.
It was a good session, but I'll send you guys to talk, and I appreciate the extra time that you guys stay here for me. It's too long. I don't want to overload you guys with information, so thank you. Thank you for another awesome session. Yeah, welcome. Feel free to stick around, get some water, ask questions if you have, or anything you like. All right, guy. Good one. Thanks, man. Thanks, man. We'll catch up soon.
Just one question for you, Keith.
Sure. Yeah.
So, you invest, right?
Yeah.
So, do you have to take credit as an investor to invest?
No.
Private, or you can just invest?
Oh, invest people's money?
Your own money.
No, anyone can invest.
Oh,
A credit investor only applies when, let's say, you want to raise money as a hedge fund or as a sophisticated fund. It allows you to. The government says if this person is accredited, then you could perform a little more aggressive investments rather than if they're not accredited.
Yeah,
so how do you find the
No, there's no
investments if you're not accredited?
I pay the same as.
How do I find it?
Like, how do you
I
find?
scan for it.
Okay, and anyone can.
Anyone can scan.
No, anyone can
They,
invest in it?
so
There's no
I think
restriction
the
in it?
Yeah, it's public. We focus on public securities.
Oh, no, only for private. I'm asking about
Oh, private, no. Private is different. Private is more, it's all handshakes.
Yeah, it's.
Hey, nice to meet you. Okay. So so this and the mixers I do is developing my network for Silicon Valley for 5 to 10 years out to become
How
a
are you
CISO.
generating revenue apart from the you don't have to pay for
The real estate business. The real estate business. Yeah. So from here, it's like I get real estate transactions from anyone that needs help.
Great, I think I'll contact
Sure. Yeah, that's pretty much it. So we can perform analytics.
I guess so. I mean, gas is a pure commodity, right?
Let's go.
Switching costs are zero, so if the economics ever disappear.
Shoot me a text, and I'll send you the link to the group chat.
But, yeah, it's fascinating they can actually run a business and not charge you.
Thanks for your time. It was a long one today.
Remarkably high in terms of convenience.
You guys.
But it sounds like it's like almost zero
Sure.
for retail.
If you guys could shoot me a text,
What's the phone number?
669
$669
221 988.
Must be losing
Yeah.
insurance.
Yeah. 221.
K
Yeah, I'm not convinced. I mean, just because, you know, you can look at MoviePass as an example of a company that's unprofitable, that just,
Yeah, just say your
they will
name,
eventually,
name
they
and
never
last name, so I
will.
can put
They'll
both
just
forward.
fail.
Last name and name, I'll add you. Because I have your first name, but last name would be nice.
Sitting at home, you're doing it, then it's convenient. This is not convenient. It's not a good example for this.
Yeah, but that gas delivery, that makes me lose insurance. That's incredibly expensive.
It'd be funny if he brought donuts and you brought donuts and we all have extra donuts. Roger.
Oh, yeah, he did today.
Thank you, Lily. I'm online. Thank you,
Have
Doris.
someone drive a truck to your house, fill up your tank, which probably takes 5 minutes.
They left already.
4 hours of drive, and where they pay $120, $130.
Yeah, I will get to you guys later if that's okay. I have a lot of
Go to each and house and deliver Amazon.
yeah. I'll get back to you guys on that. So your name is Jojo?
Yeah.
Yeah, like it's easy to just you can handle them and
Okay,
they come
okay.
Yeah,
Gotcha,
it
gotcha.
seems, I'll have to look at that.
All right, I will add you guys when I have some time.
you just
Thanks again.
Yeah? Were you expecting like a
So
stock
you leave
market
it
meetup
unlocked,
or?
like my car locks itself.
No, I mean, like, it
just the gas tank is open.
that's,
Well, my cab
I
locks,
came here
so
one
when
time.
Oh,
so
you
you
did?
must leave the gap, you must have to.
Welcome back. I didn't know. I thought it was your first time.
time.
Hey Raj, thank you again for the
Thank
Appreciate it.
Yeah, but I have to, like, my BMW
Yeah,
locks the gas cap too, most
I
cars.
met you before, right?
So you have to.
Second time.
Second time?
Yeah, oh, Lammy.
Nice to meet you. Okay. Hey, thanks for coming out. Thanks for the time. It's a long one today.
I have one question before you mixer this.
Sure, sure.
So, what's the structure gonna be like?
It's really just casual networking. It's business networking. So I host it 2 times a month.
About it.
basically, I let people come in for the first 45 minutes to an hour. There's good food, well, fancy food, set it up, make it look good. And then I rally everyone's attention to say thank you for coming out. And then we might have some entrepreneurs who want to do a pitch. So I give them some stage time. And where I ask everyone to take out their phones and open up LinkedIn and then we connect with each other. So I help them get more connection. So I try to bring the value back to the crowd. And then after that we break out back into the network. So it's 2 hours, but it tends to go to 3. So first hour, network, and then announcement for 20 minutes or 15 minutes, and then break out to networking, and then fade away to the end of the night. That's it. You saw the pictures on Meetups? Yeah, it's just like that. Yeah. So nothing special. It helps me because we get VCs coming in that I try to meet. So that's my effort for the next 5 to 10 years. Yeah.
No, I'm just, is it everyone?
Yeah, anyone ever. So, yeah. Mostly it's a professional crowd though. But I mean, students come in too. You're a student.
No, would that be like
What? Yeah. I mean, we get realtors coming in, commercial real estate brokers and stuff like that. My partners are sponsored, so they're a real estate investment group. So they're looking for investors as well. So it's like it kind of helps everyone. It helps me find real estate business. Helps me meet VCs. I'm really piloting the VC now. I'm really trying to build out enterprise adventures.
I'm hoping maybe I can get a chance to talk to you.
Sure.
You know,
Hey, I'm here for any time. So I mean, one time we were here for like 6 hours. So if you want to see the page, so this is what it looks like. So I try to make it social because people are like, hey, we want to see pictures of each other. So there's that too.
They developed to SAP as a software.
Ooh. That's cool. Yeah.
Cannot be more based on the company not taking off.
Yeah, I don't know where it's headed, but it just looks like, when you see a restaurant that sells $18 hamburgers, there's a line at the door. It kind of tells you there's a vicious discretionary, massive amounts in the area right now. I've never seen anything like it.
Yeah. Yeah, so Enterprise Adventures is really my plan to build out Incubator Accelerator, which is, you're familiar with that? So it's going to help startups go with their go-to-market strategy, how to get their first customers, and how to dissect them into deals, right? So, yeah, that's something I want to teach. So I do lectures, I do mixers, and my next phase is I want to train entrepreneurs.
I can't get him to go to these mixers. I can't get him.
Oh, you like a personal meeting? We can do that too.
Somehow, you gotta get somebody,
Yeah.
to make that link, to get the company going.
Right. So what vertical software? SAP and API?
Yeah, well, it's
Enterprise. It's
Enterprise software.
Enterprise software.
That's really good.
minimum wage
He's
barely
got, I mean, I think,
delivering Amazon packages to millionaires. I mean, it really comes down to that. And that seems to be becoming more of the case where people are saying they're working 3 jobs and barely making it, but as Kay is saying, he's got more time to spend because he's not in that sector right of trying to be in that pressure.
extractconsulting.com, it's got the whole software, the whole website.
No, we're not going. This is. Oh, okay.
They do have it.
All right, we'll go.
They never say.
Yeah, I love the politics stuff with Trump.
Yeah.
It's so funny. I mean, it cracks me up because it's just spectacular.
So what's the issue on taking off at the moment? Or
He worked as a consultant before that. But now he's doing software. Like,
All this national debt and all that, nobody cares. It's like just goes around, who cares? If it's been a problem,
Yeah.
it doesn't seem to matter, so just let it, you can double it.
Yeah, so typically these VCs, they help, so the nature of it, the micro VCs, they help with that, but they ask for equity. Yeah, that's what they're saying.
He was one of the.
Man, this is talent. This is really good. Yeah, these second
It shows you where people's priorities are.
If there's any way I can just get somebody, would have to sell it from to them. I mean,
It's a profitable? Or you have sales?
no, I mean, just the company, our company, I mean, he's.
Yeah, so
the
they
first-
only
the first
buy.
software that he developed,
Yeah.
we finally got the patent for it. It took us 10 years to get the patent, but we've got the patent. I feel like he's a little late, I think
Wait,
he's a little late.
so you want to sell?
I just want to bail.
Oh, okay. Well,
But, you know,
I mean,
he's working, he's.
so
got,
I know VCs who will buy. That's the other thing. Yeah. So, but it has to fall into their category. So we had like my mixer, right? We had the CEO of Snap.com come in, and he had a B2B software targeting small businesses called Time Doctor 2, and he has 16 million in revenue. 16 million in revenue. So he wanted to sell that, and out of VC, you might want to buy that. But it's 4x of revenue, so it's a $64 million company. So if your company has sales, then we could kind of perform valuations. There's existing multiples out there. But if there's no sales, then we gotta kind of assess the qualities, like product quality and stuff like that.
Yeah, well, he's working, I think, he's got Levi's on it, and Del Monte, he's working,
Yeah.
trying to get them.
You've been here.
Okay. Wow, that's exciting. Yeah, that's my specialty.
Yeah, if you get a chance, you just do some, you know, just
Sure.
browse around on the
Just browse his
website,
website, I guess?
and then choose something.
Yeah, I'll definitely take a look at this.
Yeah.
Now, does he have a Crunchbase profile as well, or no?
Crunchbase profile, no,
Yeah.
LinkedIn profile.
Okay. Yeah, typically startups will have a Crunchbase profile, depending on the level, right? If you're in the fundraising phase, it helps to have a profile, and that's how we analyze it here.
I try to get him to, you know, get the business plan together to do fundraising, and just anything that we try, it just
Okay.
stops only step one, and that's it. That's it.
Man, I wish my community was more developed, and I know more like VCs or even have funds to deploy, but I'm not quite there yet. But my plan is to get there so I can help people like that. So entrepreneurs who actually have a solid, like, if you're an SAP partner, like you have a strong software idea. At least your system, I know, has like some value, right? So that's exciting.
No, it has a lot of value, even to SAP themselves.
Yeah.
But him making that call to their merchant acquisition department to get their attention, you can't even do that.
Oh, I can do that.
That's what I'm saying. I just feel like there's a,
So-
you know, I think you can.
I have the contacts. I was going to show you right now. So let's say this is my other expertise, sort of, kind of. Let's see. SAP. So, well, SAP North America, I should have put. Not the German one. So we have contacts.
But somehow I didn't make any money.
It's like, oh, so yeah, what is that? Sportswear.
Yeah, this one I
Columbia
have to.
Sportswear. Columbia Sportswear bought our first product. He saw one license for 100,000, and I'm like, okay, if North America is using it, why can't you sell to the other? He just can't make the contact.
Yeah, so that's my expertise. I reach out and stuff like that. So this is the CTO. That might be the buyer, right? Let's just say like CIO, CTO, Chief Innovation Officer.
Yeah.
So phone number and contact, right? The only thing that's stopping is just really an outreach and just having a conversation, a proper conversation at the B2B level. Yeah, so that's something that I could chat. You know, that's. So I don't know if you know, but today's my lecture number 123. So I like to do the numbers because my plan is to be like, maybe 1,000 lectures, right? And maybe 100 mixers. Right now I'm at 14 mixers coming up. I want to do maybe 1,000 startups, or maybe 500 startups. Right, but then that would sound like 500 startups, but just train and help startups. That's my next adventure.
Okay.
That I want to go. Because it'll feed into my software VC strategy that I want to do.
You're real estate agent?
Yeah.
Oh, that's your full-time job.
Well, that's what I do as well. Yeah. Yeah.
What is your main job?
My main job is enterprise software sales. So I sell software at the enterprise level. So I reach out to other executives and introduce software. So it's like a CRM, a subsegment of CRM.
This is my first class.
Hey, no problem.
This guy's buying gold with millions.
But I don't know.
Sure. If you shoot me a text, my phone number. So a text with your first and last name, I'll add you.
So let's say,
And then, yeah, I'll send it out tonight in the chat.
say he asked for $25,000.
It's gonna take some time. Yeah. Brand could be like, go to meetups like this, read books, and apply. You have to apply. How to make money in stocks. That's a good starter one. Yeah, if it's too technical, then I know that the name sounds pretty basic, but it's actually a really good book. But this is the starter book that I would.
Okay, that's fine. What is your number?
669 221 9888. Hey, you're welcome.
Are you making your lectures available?
Yeah, so it's gonna be, shoot me a text. I send it to the group chat. Because it's hard to send to each person.
Like if you don't have it available.
I have my previous one as well.
Okay, but you're not making it available to click and download?
It's click and download. It's a cloud link.
Oh, it's a cloud link?
Yeah.
Oh, okay.
But it's tedious to send to each person.
Okay.
So just join the chat and it gets distributed that way.
Oh, okay, okay.
I should have a website or something at this point.
It's kind of like it changes the environment,
Hey, you're welcome. Thank you.
Okay, so.
How's it going, Captain?
And I have this option about to expire.
Okay.
So is it better to roll them over or just gonna let it
Is it
expire?
expire in the money or out of the money?
What do you mean?
So is it a profitable contract you're holding or is it unprofitable? Are you losing money?
No, I'm not losing money. I mean, the strike price is 27, 26, 27, 28.
Yeah.
And we have to sell them for 31 and a half.
So then you're in the money.
I'm in the money,
Yeah.
that's in the money, even though I might start to slow that, I thought you might have the exact.
They're calls, right? You bought calls?
I sell them calls.
Oh, now you're losing money.
Yeah, I'm losing money.
Yeah.
I'm selling the call.
It's so aggressive.
You're playing options.
Whatever you make, you come.
Yeah.
If you're at
Well,
leverage,
I didn't care, but it's like equal to 29, a little over 29.
I would clean it up. Like I would.
You don't roll over.
I'm crazy.
I mean, you're writing. You're writing calls.
I'm writing the call.
I roll over. I'm more on the long calls and put side. I don't do the writing side.
I have like.
But they said if I could go out and stay in another 3.5 months, because I'm about to expire in September, pretty soon, right? And they said it's October,
Yeah.
then they would give me, I figured they would give me like $1.40 or $1.60.
Yeah.
And that kind of thing for each one, the price.
Yeah, you're financing your loss, right? You're sending hours and finance your current loss. You're gonna sell future contracts, additional future contracts to service the existing contracts.
It's so
That would-
strange.
No.
Imagine
Because
the
I
last
already
few
own the shit.
S&P
Oh,
and all
no.
that.
So in a way, it goes up, I'm happy, right? I mean, I use money, yeah, sure. But if it goes up, who cares,
How is the
right?
entire market?
You make money, other people make money,
Yeah.
and it's okay with me, like.
Yeah.
1,500 to 2,000.
And I didn't expect it, and I sold this
You look at
car,
it,
maybe,
too.
it was
The
low,
index numbers, but I didn't know.
spending at 26%.
Right, no, I have
Gave
my
a couple
401k,
to
it's stuck, it didn't double, I don't know what.
Yeah.
And I was so low, and I couldn't do anything about it, just like, shit, these things don't go anywhere, just sell them,
You know, if a position's not going the way you thought the thing is gonna go, I would take a loss and
Yeah.
try and go.
I've known
Yeah.
that
I mean, I was thinking about rolling over,
the market is
because it's
going down.
AMD,
My stocks are,
shut it
because
off
they are high
crazy.
data, they go down way
and
than.
And like
normal
yesterday
index.
went up
But
1%.
when the market
Yeah.
goes up,
it's like,
I should go
well,
equally
you know,
up, right? And in fact, even more because it's.
so I don't know, somebody say,
But it does.
I said, well, how can I
It's
say
just
these
weird.
things? And they said, roll it over and get something. But if I roll over, I don't mind $4 in it, right? And then I don't care they take it away from that. I'm letting go, I'm getting out of it, you know. Cause this thing's a risky.
It's a tough question for me.
I mean, it's risky
Yeah.
stuff, I mean, it's in that market, it shot up so much.
Yeah.
I don't know, it shot up so much, because the last year was only 17, already shot 17, and went up 31,
Yeah.
and I didn't
Do
sell
you
it.
guys invest in HSA or no?
3 or 4 months ago.
I do if I have
I just can't wait and
question.
Yeah, but he does it quite a bit.
I could put it in gold actually.
Ask him what he thinks.
Yeah, I don't wanna advise you on that
I
one.
don't know, over. I know I extended for a while, 6 months ago, and I could collect the premium, right? I mean, like, the only thing I worry about is drop.
Yeah, exactly, oh yeah.
It dropped.
Can't do it.
I'm
Usually
thinking
when you
about
put
it,
on
it dropped.
they won't give
It dropped to close to it, it seems like better. If it,
I have like
your price is still high, I mean,
all of it is 5 or 6
I don't know, your price
I think
is high, I mean, like,
I don't know.
you're at 32, 33, you have to buy them back and try to get out of it, because I wanna get out. And so it was like you had to pay $1.50 a shot to get the pay premium, it's higher, but if the price is going up,
No,
I mean, that your price is going one and a half million,
every time I take I have to pay full.
your things, your strike price is lower,
But you don't have
it
to pay
seems we
tax
don't
on the
have to
money.
pay that much, you only pay $1.50. It's only lost like 50 cents or 60 cents, it's not as much.
Yeah.
As right in here, you pay $1.10, right, it's same strike price, as you pay $1.10. Or your strike price is here,
Maybe 1 or 2% difference. It doesn't
your strike price is 32, it's already 30, one and a half, you
People
have to
like
pay $2.
bachelors, it makes sense because we know we are.
It makes sense to me, it's like, why? I mean,
Because
it doesn't go up that much.
I would ask John, explain.
And I go,
I actually said the long calls up here.
Oh, you went the other way, I know.
Oh, no, go
Oh,
ahead.
no, so I'll let you go, but.
No,
you
no,
know,
don't worry, I'm
if-
free,
if-
I'm free, yeah.
If, you know, if it's an interest, if the company is something that, you know, interests you.
Yeah.
I'm more than
Could be me, could
apply
be-
for you or.
I know some VCs who invite me,
So,
well, I have to leave the software.
Okay.
Yeah, start with that, and then, yeah, go from there. And your name was
Lammy, Lammy.
Lammay?
M, like Tammy.
Lammy, oh, Lammy, okay. Nationality? Are you Vietnamese? Oh, okay. I didn't know that. I'm Vietnamese as well, so.
No, I know about your last name.
Yeah. I had no idea. Hey.
Okay, thank you.
Thanks, man.
I, you should totally start a podcast. That's a good
Think
idea.
so?
I think you're on some.
I'll probably like go with one of those parabolic charts.
Right. Yeah, I think this is perfect material. You should just have a camera and then,
Yeah.
post it.
Yeah. Oh yeah, speaking of that, I gotta turn off the recorder just 1 second. Hey man.
Can you send me some of the positions from managers that you like?
Just